840,000% increase. Can I put out like a tweet on that? I'm gonna put a tweet out on that.
That's so bullish.
That's
All
so
right.
bullish.
All right. That is so bullish, bro. I love it. Even if it is whatever, I think it's you gotta get it in. Will you guys retweet this?
So X402 V2 came out last end of last week, and we'll be adding support this week for any developers or merchants that are curious. Q1 next year, we're focused on improving our developer experience and comms so that it's like consistent and easier for devs to get set up. We want to focus on payment splitting, which is one of the most common feature requests. We've already partnered with a project called Cascade for payment splitting, but we just want to kind of get PayAI branded payment splitting and start adding that to our website and docs. As I mentioned, we'll be turning on fees for the facilitator. There'll be discounts for using PayAI. And then we're going to be supporting other payment schemes, like one is called Up2, which is very useful for AI agents and other cases where you don't know how much the request is going to cost ahead of time. So, for example, when ChatGPT goes to think, sometimes it uses, I don't know, for example, 1,000 tokens, and sometimes it could use 5,000 tokens. And if you're charging per token, you don't know what the price is ahead of time. So this Up2 payment scheme will allow for you to like support that use case where it's not known how much it'll cost ahead of time, and super useful for AI agents, and has been requested a lot actually by many different merchants. We'll try to get an on-ramping partner to provide a full end-to-end experience. If an AI agent developer is just starting for the first time and they don't even have stable coins, that's already a lot for Q1. But if there is time, we also want to start adding server wallets. This concept of embedded wallets seems to be a growing and popular case where a server sets up a wallet for you. It's still non-custodial, but you can set up a wallet using a traditional API like developers are used to. And so you'll see, like, we're starting to see a big trend of making wrapping and packaging Web3 in a way that just feels like Web2.
Yeah.
And I think that's huge for adoption, and especially for the stablecoin case.
All right, GMCG everyone. We are live for a holiday schedule. I do have, I believe Chill and Dom are joining today, as well as we have 2 interviews. But these holiday streams are going to be pretty light. Obviously, we're going to stream today, we're going to stream tomorrow, and then we have 3 days off. Much needed. The team's been streaming every day since I believe August, and then we were streaming before that, July, June, throughout the summer. So we are near exhaustion. We need some time off to kind of recharge, reset, get the markets right for the new year. But before our conversations today, we have Fair.Fun with Studhome. Hopefully we can get a little bit of a video demo of the platform. I'd love to see what it looks and feels like. And then we're also, we have Radar is coming on, which their token actually has performed quite well. So the man Dom is on. What's up, buddy?
What's up, man? In the building, dude. Got some interesting save tweets I'm excited to go over. Yeah, we got a fun stream today. Excited to talk to Stud again about Fair.Fun and what he's building. Some a different angle on Launchpad for angel investors. So we got the markets, the year is kind of coming to an end. So we're seeing all the recap of performances over the market, seeing gold, silver, equities, and then Bitcoin kind of slump -6% on the year, where everything else is like historically just been ripping this year. So we'll talk about that. Also, some nice legislation coming our way in early January, according to David Sachs, which we'll get into. Chill. Hey, brother. Welcome back.
GM boys, GM. Hope everyone's doing well. What's up, Dom, Josh?
Good.
Chilling, man.
Chilling. Should we crack in? Why don't we
Let's jump right in.
Let's talk about this Paragon situation off the top, get that out of
Mhm.
the way, because I feel like that's the kind of the news in the ICM crew. Let me pull it up.
You know, Chill had a full write up, so I feel like only right to let him kind of lead this off. And Chill, I'm gonna be honest
Sounds
with you.
good.
I think you went a little light on your write up there. I think you gave him too much
Yeah,
credit.
you're not the only one. You're not the only
No.
one that thought that. I don't know. Look, I completely understand it. I tend to be like a sort of like, I don't want to say the word is positive, but I try to like just think the best of people. And we've had Gavin on these streams tons of times.
Yeah.
We have plenty of conversations with him. He never gave me, scammer, grifter, or anything like that. I think what this is a perfect case study for when circumstances change. I said it in that post there at the very bottom. If you scroll all the way down, I talked about like the fragility of these like handshake agreements that utility coins have. And you see there it's just when circumstances shift, when things change, alignment can shift against holders very easily. There's nothing preventing that. I mean, let me actually pull up the tweet myself so I can like kind of highlight this a little bit. Hold on.
Hey, Surave, King's Mentality, what's up, bro? And
Dude from
Daddy
YouTube.
Duster, gotta find a way to hold these crooks like Pierre Jen accountable. Shame, how they grifted the
100%.
Yeah,
entire community.
I
Yeah,
agree.
man. Look, I agree with you. And I hopefully they retain some sort of legal counsel or they have some exposure here. Absolutely.
And here's the truth before Chill kind of gets into this again. What's nice about the direction we're headed in with Soar and Street is like you can't just up and rug the
Mhm.
token.
Yeah.
Right. You literally can't. And so as much as he would have maybe let's give Gavin the benefit of the doubt. Yeah, actually, let's not give Gavin the benefit of the doubt. But in this scenario, let's give Gavin the benefit of the doubt here and say he genuinely could not carry on his business if a token was involved. And so it was easiest for him to just rug the token. And I say rug as in everyone sold and liquidity kind of got drained. But the truth is, if he was on Soar, if he had migrated to Soar instead of Pump Fund, there would still be intrinsic value to the token, no matter what he wanted to do, right?
Yeah.
Or he would have to pay down that debt. So,
and this comes down to also the enforceability in a court of law. So the senior debt note with a SOAR model has enforceability there. There is a court you can file a complaint and go and make good on your debts and your obligations. But in this pump fund ecosystem, there are no enforceable laws that bind that token to the promoters and issuers. They might be able to go after it under some sort of, they've done something illegal, but reality is it's not equity. And this is kind of what we've been talking about for ownership tokens for the last few months. And Chill, if you want to rip in, go ahead.
Yeah. So real quick, for anyone that doesn't know what happened with Paragon. So basically, due to their association with Believe, they literally got banned from 2 major marketplaces. And if you know anything about Paragon, their services were going to be offered on some of the largest stores like Steam and some other Microsoft store as well. But basically, they were in line for getting these big listings, and due to our normal reputation in crypto of being just a grifting industry, that their association was Believe, especially after that whole Believe debacle went down, that caused them to lose their listing, and that is a critical hit to their business. And so I kind of wish Paragon would have just like migrated to Soar or relaunched there or something like that. But like after a ban from major marketplaces, it's kind of tough to kind of crawl back. But that's kind of the point. And that's the whole point of this tweet. I said this is a great case study, in my opinion. This suggests that for the most part, ownership tokens with a proven track record are the only investable on-chain asset. They codify safeguards and protections for holders. They incentivize long-term building for teams, and they attract more serious teams. And this is the part that is a key part with Paragon. Most utility tokens aren't what they claim to be. Most are fragile handshake agreements between teams and holders. And that is literally what these tokens represent now. And that's why ownership tokens are so important. The terms, circumstances, the alignment, and incentive can shift against holders quickly. And that's exactly what we saw with Axel right? When Coinbase acquired them. That's what we saw with Paragon. You know, their circumstances changed. Axel now had Coinbase on their side, so they didn't need money from holders anymore. They didn't need money from crypto anymore, and so they abandoned the token. No different with Paragon here. The circumstances changed in that, you know, they got banned due to their association. It was easier just to say, hey, you know, bump this token. Let's move away from the token, and now holders are wrecked. So, you know, it just, again, we continue to see more and more free marketing for ownership tokens, models like SOAR, models like MetaDAO, and we even see Street, you know, coming up with something. But I think between favorable regulation coming in 2026, Dom talked about this a few minutes ago, between that and the ownership models, I think we can actually get to a place where on-chain is safe to invest in again. And I say we need a full reset because I see so many times people talk about how there's nothing to invest in anymore, you know, but ownership models obviously will change that, especially going into 2026.
Yeah. A few things on this too. And Daddy Duster makes a point. He said they knew they didn't want to continue the coin even before the pump fund migration. That's the shiesty part. And I think I kind of agree. You know, when I look at this model, it's like, look, they migrated over to pump fund, and within 2 days they rugged. And the truth, when I look at this situation, is, look, this is a hurdle. Businesses come with hurdles. Not everything is going to be smooth sailing. I'm sure you've seen the meme where it's like what people expect, and it's just a straight line to the finish line, and then it shows reality underneath. It's like up and down, rocks. You know, it's very difficult. Running a business is very difficult. And it seems like Gavin, in this case, had the first thing kind of pop up that gave some pushback to the token model, and he used it as a reason to exit. Any serious founder is going to take these issues and overcome them, right? That's just what happens in business. It's a shame that it happened. Like, it sucks that this belief situation caused so much pain to Paragon. But the truth is, I think this was used as an exit scam to get out of the token, to disassociate. And it seems like the first issue that popped up, you know, gave him this reason to do it. And if it was this reason or something else, I think it was going to happen no matter what, like inevitably. So, yeah, it was shiesty, and they got 2 days of fees from the pump fund migration, and they dipped out. And so I'm not sure what their plan of action is here. I think, you know, maybe if they can go back and do a snapshot and then launch on something like SOAR and give some sort of equity ownership to holders, that would be like
it's cooked at this point. It's
yeah.
If
Gavin's 100%. Listening, though, you know, I'd say that's what I would do.
Yep. Look, the Epic Store and Steam, which is owned by Valve, does have some crypto applications in it. So, but again, we don't know the details here, so it's just kind of us. But let's keep going on. On this.
Let's move in. Okay, I got a lot. Let's can we start macro? I got a lot to go over, boys. So I hope you're willing to let me kind of just rattle off some stuff here.
Run it, okay. Bro. Run it.
Sweet. Man, so the Kavasi letter, one of our favorites here, great for news. You guys should be following them. Here's a little write-up. The stock market run has been historic. U.S. households now own more equities than real estate as a percentage of their net worth, the third such occurrence over the last 65 years. This comes as the corporate equities and mutual funds rose to 31% of net worth in Q2 2025, an all-time high. This percentage has more than doubled since 2008. By comparison, the 2000 dot-com bubble peak was 25%. Meanwhile, real estate assets fell below 30% of total net worth in Q2 for the first time since 2021. This is far below the 2006 peak of 38% recorded before the housing bubble burst. Assets owners are winning. So that's a really interesting stat, right? Retail is holding equities. Okay, so that kind of leads into my next post here. Gold is up 64% and silver is up 132.5% in the year, as both hit new all-time highs. Bitcoin is down 6.5%. Guys, for two of the largest assets in the world to rise 65% gold and 132% silver in a year is frankly unlike anything we've ever seen. These are insane amounts of money being dumped into these commodities, right? Copper is also up. Like, these numbers are astronomical. So it shows there's appetite for the markets. You just have to be in the right place. Equities is the same way. And that also goes into my next tab here. Some stats. 2025 performance. It has been a historic year in the market. Silver up 130%, gold 65, copper 35, the Nasdaq's up 20, S&P up 16, Russell up 13, and yet Bitcoin, Ethereum, and altcoins are down 6, 12, and 42%. The crypto market is now officially the worst performing asset of 2025. We say it all the time. It's been a rough year for crypto. And I'm not sure how to look at this specifically, but I will say, as bad as it looks, it kind of gives me some hope that there is an arbitrage here. And whether price is being suppressed, whether it's an opportunity, we have assets up very high this year. We see that retail is more allocated into equities than they've ever been. And we see Bitcoin and Ethereum, largely retail driven products, down on the year. So like, I see these numbers and I continue to think either, the bubble's inflating, and I don't think we're actually in a bubble. I think this kind of continues for a little while because there's no signs of stopping. Or we have a rotation and a trickle down effect at some point to crypto once people realize they're undervalued in comparison to these other things. But if silver can go up 130% in a year and gold can go up 130% in a year, just a fraction of that liquidity flowing into our tokens, and maybe it's Hopium, will drive us hundreds of percentage. So I thought those were some interesting stats, and I just wonder what you guys think after maybe seeing some of those numbers and hearing that.
Yeah, so I got to take on this. There's a major shift happening in the world. Ever since a few years back when the government seized like Russian assets, they essentially weaponized the dollar. So a lot of countries realize that, hey, like our assets aren't safe in US dollars. So what they're doing is they're running away from these US dollars, and they're putting their money into something else. And I think the volatility in precious metals to the upside is reflective of the fear of something greater breaking, in my opinion.
Yeah.
So that's why people are running to safe havens like gold, like silver. But at the end of the day, if something breaks, we know that there will be massive stimulus. And that's why the Kobisi letter, he always says, asset, if you're not an asset holder, you will get left behind. And so whether that's equities, whether that's gold, whether that's, whatever assets, man, you have to own assets because they will devalue the dollar in a meaningful way, especially either A, if something breaks, or B, if there's something that changes in the world that threatens the dominance of the dollar. They're going to do what they can to make sure the dollar stays dominant. So either way, I think this run on gold and silver, I think it's just a leading indicator of what's to come for Bitcoin in 2026 on a larger scale.
Yeah, and we're cooking up, but if you guys remember, like, I'm kind of thinking, hey, maybe these numbers that we're seeing here, like maybe this is just telling us we're due for a reset, we're due for a flush, right? So many of retail now has vested interest in equities going up. Like maybe we're due to flush them out, get them to panic sell, and then continue. But guys, I mean, you don't have to think back too far to 2025 when we got a massive dip based on, I'm not sure if this was tariff or war news, but we had 18% as fast as the COVID dip. Back in 2025, right? So, and that was less than a year, 200 something days. And so, for me, I look at this and I don't see any reason for like another massive reset. Maybe we trend sideways for a bit, but I just think we continue to trend up. Asset owners are winning. Hopefully our Bitcoin gets a little shake on that.
Yeah, I think we still have a ways to go. We're still respecting a key kind of area on the chart for Bitcoin, but there's a lot of headwind or a lot of tailwinds in 2026. So I don't know if we take off now, but I am really, really bullish on 26.
One of those tailwinds, chill. David Sachs, right? David Sachs, as we know, is crypto czar. So he's doing all the talking with President Trump and making the decisions when it comes to crypto. Here's what he tweeted out the other day, almost 1 million views. He said, "We had a great call today with Chairman Senator Tim Scott and John Bozeman, who confirmed that the markup for Clarity is coming in January. Thanks to their leadership, as well as Representative French Hill and Congressman GT in the House, we are closer than ever to passing the landmark crypto market structure legislation that President Trump has called for. We look forward to finishing the job in January. Big stuff for January. And we'll talk about this with Studholme later, who's, I think very interested in the equity side of, private equity and equity in these companies, and maybe bringing equity on chain. And this is kind of signaling that a bit in January, which is a little earlier than I suspected, actually. But he did mention that the other day. So pretty cool stuff. Josh, Chill, what do you think?
Yeah, I mean, we've been talking about, we've been following regulation. If you've been following the MCG account too, like every time there's anything positive for ICM, for on-chain, for on-chain assets, we've been kind of tracking that regulation. We've seen that over these last few months. I mean, honestly, over this whole year. What's up, Ave? GICM,
Ave. Go to Maya's profile real quick, because I think it's quite telling of the positive, the positive momentum. And just look at this, hi at SEC Gov. If you go right, you don't even need to go that one. Go to this one right here, hi SEC Gov. When would a crypto launch platform founder ever tweet at the SEC in a joyful matter? So I think the attitude has changed. I think people are getting traction in meetings with these regulators, and hopefully we get that good, solid regulation. The other thing I wanted to bring up is in chat here, there's a link, Dom. I don't know if you can throw that open in dark mode before I blind everyone.
Yes.
With light mode.
Thanks for doing that for us.
2026, you'll see dark mode from
please,
Josh.
Huge,
so Strategy announced this morning that they've increased their US dollar reserve for dividend payments to $2.2 billion. I think why this is significant is because a lot of people, I believe, are praying for MicroStrategy's downfall and saying, hey, there's probably a margin call here that they might get called, but if they have enough reserves, I think they'll skate by this. Okay.
Well, so I've done extensive studying on this, and actually there's a great video on YouTube by Virtual Bacon. I can pull up for you guys. It'll give you much more insight on this and the risks of Strategy blowing up. And honestly, they have a long ways till their margin called, and I don't think it's much of an issue. So let me see if I can.
Yeah, I tend to agree. I think MicroStrategy FUD is gonna be equivalent to the Mount Gox FUD, right? Like some of the historical FUD that's kind of marked, or the Tether FUD, some of the historical kind of sentiment that's marked bottoms in the past I think it's just going to be like that. I don't think MicroStrategy blows up here. They have too many levers to pull.
Yeah, I would recommend anyone going and watching this video. And I'm not sure if Josh wants to link it. I know sometimes Twitter is weird if you link stuff.
Drop it if you.
But I will drop it. It's worth a watch if you want to get some more information on the risks behind MicroStrategy and can it be liquidated. And I think he lays it out very well. Again, Virtual Bacon does extremely good research and
follower of MCG. And actually, I've met Virtual Bacon in real life at a dinner. Good guy in Toronto.
Yeah, he is.
Nice.
He's a good guy.
Yep. Yeah. He was casual. He's like, oh, I'm a content creator. I'm like, oh, cool. Let me look you up. Had millions of views. I'm like, oh, wow. Okay. You're one of those types of content creators.
Yeah, man. It's funny. I watch a lot of this stuff and he delivers stuff with, he delivers the facts. He gives you the numbers. He gives you the information. And he puts a very convincing, tone behind everything he says. And I do tend to agree with him.
So I'll link that in there. I don't know if you're going to play a little segment of that, Dom.
No, because I actually didn't have it prepared at all. But I do know he mentions a bunch of the risks, and he does, I think, a good job weighing out both sides. So it's a longer video, 45 minutes. I would put it on 2x speed and just run through it if I was you guys. But you can do that personally. I would say though, based on this video, TLDR, we're good. Don't worry about MicroStrategy blowing up.
Also, I just saw that I posted another tweet in private there, the second one. The Trump's Trump media just bought, I think it said $50 million worth of BTC.
Yeah, here, let's see.
And now holds $1 billion.
Trump Media just bought 451 Bitcoin, 40.3 million, and currently holds 11,542 Bitcoin, 1.04 billion. Nice, a little fraction of what they made from Trump. So we're kind of getting it back into the trenches, guys. Yeah. Cool. I don't know. You guys have anything to say on that?
Not much on that specifically. Not much on that specifically. Honestly,
interesting though. Trump admin has been, indicative of, like, we've seen Trump and Eric say, good time to buy crypto. Trump says, buy Bitcoin. The next day announces some sort of like peace deal with, people, right? So he has been a bit of an indication on what's to come. He kind of signals, I think, his moves in this sense. So I don't know. Maybe it means something.
Talked about that. We talked about that many times on the show. Literally, he called the bottom in April, just like we did.
Yeah, he put the bottom in. I mean, like, look, I rate it. People have been pretty critical, calling that market manipulation, all this kind of things. I'm like, look, he tweeted it out publicly.
He's literally helping us. He's literally he has the information, and he's literally just going to share it.
Yeah,
and
he might have told the investment banks, "Hey, go long now," and then tweeted that out. But
yeah, right. We got the tweet all at the same time, but the maybe Trump admin got it a little bit beforehand. I guess that's the insider question. But I don't know.
And that's the other thing. Like, they're bullish on 2026, right?
Yeah,
like,
I'm tired of winning, boss. Frankly,
yeah, that part has not materialized just yet. But yeah, I think that's coming. That's why I'm still bullish on 26. I'm not gonna rush trying to like force Bitcoin to go up right now. I think we still got some sideways, some chop to get through. But I'm super bullish 26. And honestly, guys, I'm really bullish on prediction markets. I'm actually like getting into prediction markets right now, and it's been an eye opener. Not gonna lie.
You got any nice calls?
So all right, so here's a strategy for prediction markets. I'm testing out a platform actually that allows me to trade on Polymarket, but it actually looks pretty sweet. I can show you guys if you want, but it's called Bullpen. It makes it really easy. It's like a trading terminal for Polymarket, and you can basically filter. First off, it's it's very easy to access. You can just deposit straight from Solana, and once you get in there,
your screen for this, or just
yeah, sure, why not? So it's just like a tester. Like I'm just like throwing like some stuff at this. Let me see here. Boom. All right, so basically here is my screen. And let me add that. Boom. Here we go. There we go. So basically, this is what it looks like. And there's this question, right? The highest grossing movie in 2025. And I looked this up, right? I looked this up last night, and apparently Prediction Markets thinks that the highest grossing movie in 2025 will be the Minecraft movie, right? But if you go to top grossing movies, on something like the Box Office Mojo website, you can quickly see that the top grossing movies, is not gonna be Minecraft, but Zootopia. And currently, basically, if you buy right now, the prediction markets say that Zootopia is not the highest grossing movie in 2025. And if you buy a yes share, if this comes true, this is basically like a 100x return in prediction market in terms of like a prediction market trade. So you buy shares of yes at like 0.1 cents, right? 0.1 cents. And if this comes true, like in like, let's say a week or so, when 2025 closes out and Zootopia is it, then these yes shares will reprice to $1, and that's 100x return. And so, like, look at this, $20 get you 2,000 in return, right? So I'm just kind of like experimenting. Like, I have no idea, an exact edge. I just look for high liquidity markets that are mispriced. So something with good liquidity, good volume, good attention, but obviously the market has it wrong. And in this case, they actually They actually do. So yeah, that's a trade that I'm in on prediction markets right now. We'll see. We'll see how that plays out. But again, if you go to literally one of the biggest, box office websites, um, as you can see, it says here that it says gross was Minecraft at first, but you if you look, um, this was the wrong one. There's another one that was basically just saying that it's two to three other movies are ahead of Minecraft basically. So markets are mispriced. So I'm on the trade. That's
Look at that.
basically
You're hunting for alternative opportunities. I love it. Actually,
that's it.
on that same mindset here, I got something from Moby that was interesting. You know what, guys? The markets are difficult, but there are always opportunities. Chill's showing you some. Here's another one I'll show you, and I think this was pretty cool. Mateus from Moby said, continue to see investors stack SpaceX on Moby Agent Mobile. Again, Moby supports the show, so go use the referral code in the bio and get on Moby Mobile. Polymarket says odds of SpaceX opening at 1 trillion market cap at IPO are 64%. Basically, the Polymarket, the people are saying, hey, we think SpaceX is going to IPO at $1 trillion. However, tokenized SpaceX on Moby Agent Mobile is currently priced at an implied valuation of $791 billion, right? Call it 800. That's a $200 billion miscalculation. ARB question mark. Is there arbitrage opportunity? Moby is the best way to access pre-ICOs, liquid, easy buy with Sol with one tap, on board with email under 2 seconds. Each tokenized share backed by real shares, powered by Anduril. Think the market catches on to this sooner than later, and we will see a re-rating. But the good thing, OpenAI, Anduril, XAI, and others are also available in Moby right now, so you can run back the same playbook. Okay, so look at this. You can see $416, and then you can see the IPO, 64%, right? And we know that Polymarket's been an indicator of truth recently. And then recently, Moby, Matthias gave us an update. There we go, 156% in 24 hours, $619.91. That's pretty. Look, there are opportunities there. If you would have spotted that arbitrage opportunity, you could have been cooking a little bit. So I thought that was a pretty cool testament to Moby Screener, Moby Mobile.
Breaking news. Go to Studio Chat. Impulsor just launched their first product.
Let's go.
Yep, I did see that. Let's go. And this is a little bit different than the engine that we just covered. So here, we'll pull it up. Introducing LifeFinder CPT, Impulsor's strategic partnership in worker safety. We are thrilled to announce our partnership with LifeFinder, a revolutionary intelligence alert system for hazardous work environments. LifeFinder CPT is a wearable device and infrastructure platform that detects emergencies in real time, monitoring for water, shock, temperature, and abnormal movement. It's designed for maritime technicism, emergency responders, and anyone working or living in potentially dangerous conditions. The market opportunity, the global PPE market is valued at 80 billion plus and projected to exceed 150 billion by 2033. Within this, intelligence safety wearables represent one of the fastest growing segments. LifeFinder CPT captures this intersection perfectly. The Impulsor advantage. We are not just disrupting LifeFinder. We are positioning it as the foundation for multi-phase rollout. Phase 1, deploy LifeFinder's intelligence alert system to customers. Phase 2, return to those same customers with RF and magnetic resonance CPT upgrades, enabling battery-free maintenance, free operation. This is how frontier technology scales, smart partnerships, smart execution. Welcome to the future, worker safety. Okay, let's unpack this a little bit. So firstly, we understand a couple of the offerings. We know that the CPT team or Impulsor team is working on building multiple devices. This is one that they've hinted at, but I don't think it's what everyone was expecting, because we know they're really known for their their laser beams and their energy. This right here is a wearable device for people in hazardous environments, right? If I'm going to like coal mines or if I'm doing some sort of dangerous job, this is going to monitor to make sure I'm safe all the time. Now they've invented this, right? So it's a big market. They talked a bit about how it's a growing market. Now they're going to pair that with their technology to beam energy and basically make these last 24/7. Some of the issues could be, hey, if there is a hiker or an emergency guy going up into the mountains and this thing dies, it can't alert us if he's in danger, if he needs help, if he needs saving, etc. In this case, they could use CPT technology to have it 24/7 and really keep these people safe. And it is a emerging market. So guys, you want to comment on this?
Yeah, I actually have some comments. So my father used to run a safety company that would distribute some of these types of devices, and these have very large contracts. I think what's most important for Impulsor is they have a product that they can sell today and commercialize today. Whereas the drone thing that we talked about last week kind of has a longer R&D timeline, right? It's not like we see lasers powering drones today. So that's something that could take, a couple of years to really commercialize, but this is something you can commercialize today.
Yeah, I think it's pretty cool. It's also pretty cool to see that like there's a lot of like depth to what Impulsor team's building. They go from beaming lasers at drones to power them 24/7 to wearable devices that help people in hazardous environments. So it's pretty cool to see the range there. And again, further reinforces, I see this and like I'm trying to be quiet. I actually don't talk about it on my feed all the time because I feel like it's so obvious. For $21 million, you can get pseudo equity in this company. Right. And to me, it's just so obvious that this goes and raises at
21. It's like 3 million.
that's 10% of supply, right? Market
Well,
cap.
if they, oh yeah, okay. But wait, how does that work? Because they burn the outstanding tokens. They theoretically could reissue them, but does the 3 million tokens represent, or however many millions of tokens are, represent the full equity of the business? Or
No, it represents the equity that they have debt against on chain, right? So the company starts with 100% equity. They've given 7% on chain, and so the current price, and I'm not sure. Yeah, and so the current price, you can call it 30 million even, but the 7 or 6% that they have in circulation is what's being traded. So I see this company for 30 million, and it's so obvious to me that again, Patrick being invested into Sora is going to want this to succeed in a big way and prove out the model. And one way of proving out the model is number one, raising higher, having a liquidity event that'll, instantly reprice a speculative market tied to it, or exit. Like, again, I see this at 30 mil and it seems like such an easy opportunity for me. And so I continue to stack, which is like ironic because I don't talk about it much, but the reason is I'm trying to stack. So
we have Studholm in the waiting room. I think last thoughts here. I believe a lot of the market pricing around CPT today is based on management's kind of track record and background. Now what we're looking for is kind of those nuggets of stuff that they might have in the waiting or already done that they just haven't released to the market because they wanted to have, let's say, a rollout. So things like signed contracts, we've seen the patent filings. I don't know if there is some revenues that are coming into 2025 before the end of the year. I doubt it, but maybe definitely next year, I would assume. So, but yeah, either way, there seems like there's more here. Like you don't just create this product in a month since you launch your token. It's something that you've worked, longer term on. So there we go.
Okay. Before we pull up Studholm, could I actually do something real quick? I want to run through Mercy's article because I think it ties in really beautifully.
Yes.
And then we'll pull up Studholm and get going. Okay. Mercy just dropped and it's frozen. Could one of you guys pull this up? I don't know why. I have an issue with articles on my main Twitter where it freezes.
Let me try to pull it up for you.
Because he mentions Fair.fun, which is, I kind of just wanted to run through everything and then close it with Fair.fun.
I actually watched this talk live. It was a good talk by Mercy. I enjoyed hearing him on stage. And then Studholm came up on stage after. Do you remember that?
Let's go. Yeah, so maybe just run through ICM because I actually remember someone commenting as well. Yeah, 17 said, let's talk about ICM. So here, we'll give a quick update, guys. So here's some key metrics. And Chill, could you just scroll up to the start so I can recall the context here? Okay, this is the monthly recap. I didn't know if this was the yearly or monthly recap. So monthly recap, nice, thank you. Key metrics, they have 8 active incubated projects. They have 3 new projects that will be incubated this month. New projects building on the staking pool is 1. Audits completed or in progress, 1. Events attended, 3. Events hosted, 2. The assets under management has grown 175%. Okay, so good key metrics for the month. And again, you guys can read all this yourself. It's not too long, but they talk about what they're working on, value accrual framework, the issues they see in the market route, right? So they're currently working on foundation is laying for the upcoming staking pool. The core staking pool architecture is being finalized, external audits, early feedback. Staking will be one of the core benefits for both NFT holders and token holders. And I'm trying to make this quick so we can get stud up. Look at him. What a stud. He talks a bit about the pivot here. The original go-to-market was focused on long-term, these tokens. They've kind of since switched that up a little bit, to get the fee dividends from incubated protocols. And they're currently incubating Fair.Club. There we go. A team who wanted to solve a few existing problems. So we saw poor launch mechanisms for new founders. Founders can raise small to medium-sized checks from value-add angel investors, and expands ICM deal flow and ownership exposure. So talking a bit about Fair.Fund there, and then you guys can kind of go through the rest yourself. But it's really good to read. It's a good read, and maybe we'll cover it more after this. But nonetheless, we have Studholm from Fair.Fund.
Maybe Studholm could give us some insight on that article there.
Yeah, Studholm. We got to meet him up in Abu Dhabi. We had a good time. I got to see him at the booth. We went to the club after, and it was a lot of fun. So Studholm, how are you doing, buddy?
Hey guys, really happy. How's the mic check? Can you hear me?
Yeah, you sound good.
Good. First of all, just on the Impulsor news, man, that team, they're such a different level. They're going through ICM.run, the incubator. So we know that team really well, and they've got so much more to come. And especially like all the different kinds of products they can launch with like their IP. I'm excited about that project a lot. And like you guys said, right, like having that stake in SOAR and making sure that the SOAR model works. And as soon as there's going to be one acquisition, one merger event for a project where their tokens are, protected, let's say, right? I'm not saying like equity-backed tokens. I'm just saying like protected tokens, right? Because everyone's looking for a different format at the moment. As soon as one acquisition happens, I think we're there at the end.
Can we touch on that too? Actually, Chill, if you scroll down to the bottom of that, Mercy makes an interesting point here. I think it plays into the thing we've been kind of saying is like there's vested interest in Patrick, raising at a higher valuation or like proving out this model. And right here, Mercy says something very interesting about CPT. If you can find towards the bottom, he talks about it. Yeah, Impulsor. There we go. Update tokenomics burn 93% of their total supply. New patents and product rollouts, plus early signs of institutional interest in what they're building. We look forward to showcase the DRP standard in real time as they enter a new liquidity stages in their core company. And I think it's interesting that last sentence there, as they enter new liquidity stages in their core company. I think the team incubating CPT, right, Mercy and ICM.run, knows that we're at this point where they're in these. They're open to liquidity events, whether it's higher valuation raises, whether it's acquisitions, whatever it might be. And again, this is hopefully proving out the CPT model. So I thought that was really interesting as well. Just wanted to point that out on your point, Stud.
Yeah, and they're saying like DRP 1, right? But it's kind of like it's actually really DRP version 2, where they burnt that 90%, which made sense. So that only 10% of the equity is represented by, or 10%, sorry, of the value of the business is represented by the tokens. So it makes a lot of sense, and I think they have a lot more up their sleeves. I think that team.
Yeah,
and, it's exciting.
It's interesting.
Yeah,
you're cutting out a bit. The mic is like sometimes coming out stronger, and then like we're losing you a little bit. I'm not sure.
Let me
Are you guys hearing that, Chill and Josh? Or
Yeah, just a little bit. I think we can
work with it. Just want to make sure we're
try to roll with it.
clips.
Yeah, it might be your Bluetooth headset or something, or your earbuds.
Yeah, we don't hear you.
Now you've flipped to a microphone that's not connected. It's okay, man. It's a live show, Could just vibe out here until Christmas hits. So
Wait for
yeah,
Santa.
I don't think we got you. I don't think we're hearing you, Studholm.
I'm not sure what switch you just flipped, but now we can't hear you at all. So maybe I should have just kept quiet.
How's that? Is that
We hear
better?
you. We hear you. If it's in and out a little bit, that's
we'll
fine.
let
But
you know. Where did your name come from? Where did Studhome come from?
I'll speak slowly. Yeah. So my surname is a Scandinavian name. So it's my surname.
Okay.
And it means breeding. So a stud is a male horse, and a hole
Yeah.
is a
Okay.
breeding place for horses. So I'm a horse breeder, really.
Oh, really? Okay. All
No.
right. Because in the
I-
West, a stud might be
By-
defined as like someone like myself, dog.
by Viking,
Dom
Viking
might try,
Association.
but yeah. All right.
no, well, you know what? I
And-
see Studhome. It feels like one of those names. You know when you log in to create like a new account and it gives you like two random things and pairs it together.
Yeah.
It's like Studhome.
Yeah.
That's what it kind of feels like.
That's it. Horse breeder. Yeah.
All right.
Love it.
We got it.
So touching on Mercy's post, man, there's so much going on in the background. I see him. It's like he is like an incredible juggler. Let's say he's got so many balls up in the air. And they're all moving forward, and he's constant. Like right now, I have a call with him after this. We're going through basically like the cleanest UX we can bring for Fair, and he's wanting to contribute to that. He's helping all of the other incubated projects. So yeah, I just want to give a shout out as well to Mercy for also creating ICM, ICM. And as you guys can see in this video, he introduced me to introduce Fair during Met Davy, where we met up in person. Yeah, happy to introduce it here to all of the listeners and give a background about
mute that screen, Dom. Sorry, just hearing the talk coming.
You can hear this?
Yeah. Oh, is it?
It is muted.
I can't.
Oh, sorry. That might be on my side. All right, Seth, I want to ask you back to CPT there. So give us the life cycle. So ICM.run is, connected to Patrick Sang. You guys launch CPT and that gets into the DAO treasury. CPT may have, obviously you can't just create a product in like 2 months post-launch. So they are a company that has been lining stuff up. Let's say we want to prove out the SOAR DRP model through some sort of liquidity event. Like, are all these things connected, or am I reading too much into it?
I dare not say too much. I think one thing is with ICM.run, because the projects commit X% of their token to the DAO, which is on DAOs.fund, the treasury. That treasury is locked for, I think it becomes unlocked in 2027, like quite late in 2027. So there's like 2 years. When ICM.run receives tokens from a project, it means that like the incubation team has committed to 2 years to making sure that project works, right? And the projects like Impulsor, especially with like Patrick and the SOAR team, they're in this for the long run, right? And you can see that yes, they have so much going on, and really high quality people working for them. That this is one that you just want to sit on. It's just a keep.
Okay, so let's kind of talk about the relationship that you have with ICM.run. I'm curious. You obviously you work very closely with Mercy and ICM.run. You were one of the lead mentors in that, and then you kind of spun off and you've been working on this Fair.club situation. They're incubating you. I think you have a piece of your fees that are going to go towards ICM.run. How does this conflict of interest situation work? Because obviously, like, it seems like you have a good relationship with the SOAR team, but you're in a sense launching a competing platform, right? And we're going to get into the platform. So maybe just give everyone an idea of your role in ICM.run, then your role in Fair.club, and so on and so forth.
Yeah, I think first of all, Mercy's made it very clear that ICM.run is like launchpad agnostic. We are one of the launchpads that are working with ICM.run. SOAR obviously is another one. We all kind of know what happened with Believe, and I was part of like one of the Believe whales and part of the Believe whale group, and I believed. I really thought what Believe created transformed the way we could fund projects in terms of earning fees, and transform the way that, especially on Solana, the focus moved away from memes to ICM tokens. And unfortunately, Believe changed its direction. And there's now a space where there's multiple launch pads, and we're all looking for the holy grail, right? Like what happens with the Clarity Act and if tokens are allowed to represent equity, where we will be able to buy and trade in very early startups right from the start, where you can have like full upside. This is such a huge industry, right? Like it's $1 trillion, multi-trillion-dollar potential, and I think there's going to be a flavor for every kind of launch pad and every kind of project. What's really important, I think, that we saw obviously recently with Paragon is that the project needs to be completely independent of the launch pad. Like the last thing that we want is a project's reputation or how a project succeeds in any way connected to the launch pad. What we want to do with Fair, and I'm building Fair out of vengeance. I've said like this previously, out of a real kind of anger that I want to solve specifically one thing in the industry, which is to make sure that the best investors get into a project early. And I came from that experience. I spent nearly 2 years building up to my own token launch last year, which was called Matrix One. That was essentially we originally built the first 3D NFT marketplace called Metamundo, and then we moved that into like AI powered avatars, and we spent a lot of money, we spent a lot of time to try and get the perfect token launch last year for Matrix One. We launched on multiple exchanges, and I did an airdrop pane where we did that similar to like Cookie or to Kaito to generate mindshare and to generate interest in the launch. And I did everything I thought I did to make sure that we got the best investors in early. But what happened was I just got airdrop partners, and they really kind of killed the momentum and the token price. And at that moment, I thought, okay, this can't just continue. We need to solve this where project launches need to show upside for everyone, and projects need to, with how the industry's changed now, pretty much anyone can build a product with AI. But what's the most difficult part is building that community and the go-to-market and the reach that you can get. So the solution is how I think is like, how do we make sure that good investors with good intentions get into the best projects early? And that's really how we set out to build Fair. Originally, we were building Fair to be a SaaS product to help projects with building an organic community. We were calling it InfoFi, like Generation 2. So building on top of kind of how Cookie and Kaito were measuring mindshare on X, but we were doing it in a way where it wasn't kind of rewarding, kind of the farming of mindshare, but it was rewarding more organic posting and organic supporting of a project across multiple channels. And we were building the SaaS product for quite a while to launch this, to solve this problem. And then I pitched it to Mercy and Soju, and they said, okay, we have to take this tech stack and we have to make sure that, you guys can launch projects where they get the best investors in early. And Saw has its benefits. Startup Fun, I love that team as well. Also a great launch pad. MetaDAO has its benefits, also a great launch pad. We're moving into what I'm calling is like the end game for crypto, right? Where everything that we set out to achieve from the ICO days in 2017 to now to next year, where hopefully we're not at risk of getting any Wells notices or the SEC being on our back, where we're going to have access to such a larger market, and it won't be considered like securities anymore. So yeah, I
want
think
to
competition's
go
good.
back to your comments on the other platforms. How do you position Fair, was it Fair.club in amongst those other products? Like what if you were to give like a 10-second view on each of them, what parts of the, let's say, ICM stack or types of projects would launch through each of them? And where do you see Fair.club kind of finding its little unserved niche among them?
Yeah, I think the niche, the projects. The reason why I'm building Fair is I have quite a big background in Web2 venture capital and accelerators, and started Web2 projects, where these projects, they have capital already, but they want to maybe just to like tokenize to build a really strong community of like value-driven angels that will go and push the project, and help them with their go-to-market, help them with their reach, do business development, open doors for them. This is really where the value of Fair comes in, because essentially what we're doing is we're bringing multiple networks of really great angel investors, but also VCs to Fair, and you can list your project. And as a founder, you can list your project, and you can basically open it up for investors to apply to be at the earliest stage of your project and help push it forward. And then you as a founder, you can decide on who joins your pre-sale round or not, based on the value and the merit that those investors can bring. So we're different to Saw, and we're different to Startup Fun in the sense that I think we're going for different projects in a way. The projects I'm speaking to at the moment, are like we have our product, we maybe even have funding, but what I want is a really strong foundation of community to start with.
So we have something called the Fair Score here up. Can you kind of quantify what makes a good angel investor, or maybe a good angel investor that these projects will want to include in their round or in their token, I guess you could say?
Yeah, so I think we were looking at how we could score investors, so that we could help maybe some of these Web2 founders, or great projects but were new to crypto, to help them understand what makes a good investor, but also to maybe incentivize and motivate the investor to be a better investor. And previously, myself and the team, we were building this InfoFi 2.0 SaaS product, which has the social impact score, which you can see here on this card. And the social impact score is essentially like we do like a full, really deep AI analysis. We don't go cheap on like using like our AI credits to like just dive into your socials. And we have like a pretty complex prompt that goes and takes all of the information, analyzes all your socials, looks to see if you have chilled, let's say, rug pulls. It goes to see if you're like promoting more like meme tokens. It looks to see how old your account is, to see if you've changed the handle. It goes and sees like how you've contributed to other projects across socials. So it takes a lot of different like data points, and then it creates the social impact score to see how let's say transparent or good you are on behalf of projects. And then we have the token holder score, which was developed So this is the social impact score here, yeah. So you can see the likelihood of bots. And this is the technology we've been building for like, the better part of 2025, to make sure that projects don't get bots or airdrop farmers holding their token at the start. So this is that technology that we're incorporating into this. You can see here it's looking at to see what you talk about, and it does a summary of kind of you as.
Why do you think no one's done this? I mean, this seems pretty obvious that you could look at accounts at scale with AI. You can clearly see what they talk about if you have some sort of index of projects where you know, okay, these contribute negative score, these are the winners. You know, very clearly you could go and look at Avicii's feed and then go look at like I don't know, a project that was heavily farmed, like I don't want to say BNB, but I mean it was, and you could see contrast like those two types of launches and see, all right, who was contributing, who is early, etc. Why has this not been done?
I mean, it kind of builds on what protocols built, and Miko, I know from protocols, it kind of builds on what Cookie was built, and it also kind of builds on what Kaito was built. But included in all of this is kind of like my real experience of the industry for many years, and I'm taking that experience and applying it to this product, which not too many people have. So, for example, I would do back in 2024, early 2024, we would do, we were like bringing on KOLs. This was back in the KOLs day, and no one really knew who actually had impact or not, right? So you would look to see who was following other KOLs and kind of what impact they had on the score. So this is taking all of those learnings and applying it. It's an evolution, I would say. So it's built on top of those. So then we have the social impact score, and together with Meteora and ICM.run, we developed the token holder score. And the token holder score is essentially looking at all of your wallets, your on-chain activity, and taking a few different weighted data points. So how many investments you've made, how much you've invested, how long you've held those tokens for, like if you sold them quickly or if you have not sold them quickly, and it creates a token holder score to kind of grade you as and rate you as if you're an investor or if you're just like a trencher and you just want to get in and out of the project quickly. Because every project, what they want is they want people to come in from the start, get the token, and then stay with them for a decent amount of time. We're not, just to be really transparent here, we're not punishing if you sell early, but you get, and it's not like you have to hold the tokens for years and years. It's really looking and weighting different ways of how you invest on chain. So we're taking the token holder score, which is your wallet, and we're taking your social impact score, and we're combining that to make the FAIR score. And that's one way where we're educating investors on how you are as an investor, and if you're worth bringing on at the earliest opportunity in that project. And we're hoping this will really kind of solve the problem of, I think there was a Legion project that launched recently where it was Cookie, like Mindshare farmers and Legion ICO investors into the tokens tank, because again, kind of retail is the exit. Whereas we want to really work with these long-term projects that want to start off with the best foundation and give everyone the biggest upside.
With all these metrics, it seems like, and all these platforms, people always find a way to game the system, play the game. How much just pure relationships play a role in this? Like, for instance, Studhome, you know us, you know that we're fairly value aligned and have been talking about ICM since the very beginning and have really pushed it forward. And you likewise probably know other people that are part of ICM Run and who might be part of ICM Run in the future. Do those type of relationships also play a role here?
So how Fair.club will work is a project can list and they list for 21 days. And then we have something called the waiting room, where investors can apply to basically be part of the bond, the price of the token as soon as it hits the bonding curve. And when you apply, you share your token holder score, your FAIR score, your social impact score with the founder. But you can also write to the founder a short introduction of how you wish to contribute to their project. And then you can offer the founder to get in touch with you and chat with you and do more due diligence. Will it be gained? I think every launchpad has to be aware of that, right? There's always going to be some ways where people are looking to, work the system, and we're aware of different methods, but it's also, we're leaving it up to the founder. Not only that, we also want to we're very much product builders and service providers. So what we want to do, how we're working is we're working with curators. So ICM.run is a curator. We've also signed up 2 more really interesting curators, similar to how Fjord Foundry worked with launch partners. If you guys
who are the, sorry, go ahead, Dom. Dom, you're muted, buddy.
Do I happen to have the 2 maybe pulled up here on my screen?
Not yet, no.
Dang, bro.
Okay.
Yeah. And I think we have quite an interesting like revenue fee sharing model. Where
but before you go, can you blink twice if we were close?
No, you weren't close.
I gotta write show notes, so I'm hoping one of these retweets it.
Sorry,
Well,
I saw Mercy posting about them, so I was like, man, maybe these.
Yeah,
are the ones.
well, Mercy was at the one, the yellow one. I don't know
Yeah,
what the
yeah.
name is, right?
Yeah.
Again, you feel free to blink twice if you need to.
Yeah. We'll have to have another chat when we.
Okay, all right.
We know.
Fine, we'll have them on. We'll do that.
Yeah. So I think we have quite an interest. So very much inspired really by like how Meteora is so generous to everyone that contributes to their ecosystem. We want to be the service provider, the software, the product, and we want to work alongside like really good curators who will essentially bring projects to FAIR and help them with the whole process of the incubation and launch of the token. So ICM.run is one of them, and our fee sharing model is a little bit different to the other launchpads. When we're talking about kind of differentiating FAIR to SOAR and to, let's say, Startup Fund to MetaDAO, we're going to be using quite a new, let's say, product from Meteora, which is a dynamic fees, which will, as maybe your listeners know, that let's say we launch with like Believe, they had 2% fees for the projects. But what happens is after a few weeks is that other liquidity pools are opened, which then kind of like take the fees from the project and then rewards the liquidity providers. So we're going to be actually using like a dynamic fee, which should average around like 1% or 2%, but it'll be dynamic based on the volatility of the token. So in theory, this should actually drive more value to the projects. It should drive more treasury building to the projects. And the projects will actually get 70% of all of the fees. FAIR will get 20% of all the fees, and the curators get 10% of all of the fees.
Wait, okay. So one more time, go over that split. It's say again.
70% for the project, and 20% for FAIR, and then 10% for the curator.
Okay. And so are the curators, would that be, you said you're working with 2 incubators right now. Would the curators be those incubators?
Yeah.
Okay. And are you open to working with any incubator, or like, what does that business development pipeline look like?
We're open to working with any incubator, yeah, or any curator.
Okay, so I'm curious, what are you looking for when you're looking for incubators or curators? How are you doing BD?
Yeah, so when we're choosing the curators, essentially we're looking for like either a group or a single person who can take that project from like 0 to 1, 1 to 10, in terms of preparing them for X, preparing the tokenomics. We will also help as well, but tokenomics, making sure they have good profiles, making sure there's a good bio, helping them as well with, you know, speaking to the right investors to get in early on fair, helping them with, I think when we're talking about like, it's about who you know, and these projects, we're bringing on people that don't have, sometimes some of the projects won't have a lot of experience in crypto, but they want to have this strong community of people helping push the value of their project forward. So that's the role of the curator.
Okay, so your Launchpad favors angel investors who have basically solutions for projects that are looking for either community building or something, and then these projects reward them by giving them basically the lowest possible entries into the token.
Yeah, correct.
Interesting. A couple things I want to touch on. Sorry, go ahead if you want to spit on that.
Yeah, no, I really see something I want to emphasize is the tech that we've been building for, the majority of this year is like this InfoFi 2, like generation 2, which is more organic, far more organic way to grow your project in the community. As you guys have probably seen that with Kaito, with Cookie launches. There's a big push from all of the, let's say, mindshare farmers up until, let's say, the token comes out and they get the airdrop, and then it kind of drops off. We want to fix that by extending the help from these token holders for the, as long as possible for the project.
Okay. A few things that pop up for me. Firstly, what are these tokens going to represent? I know you've talked about a few different models. We're seeing the bias towards ownership tokens, whether that be equity, pseudo equity, ownership, access to the treasury. We even see, and something we talked about on the last stream was, this bill that David Sachs is working to pass here, and January seems to be when we might get this Clarity Act. So maybe tell us a little bit about what your plans are for like the value behind these tokens intrinsically.
So I think what token holders really want is that they want to we don't want a Padre happening again, right? And they just want to make sure that if they are buying a token in a project, they want to be protected in case, any of these events happen to the project. So we're absolutely going to be providing as much protection as we can. I can say that to investors. And I currently have right now kind of like 5 different options and pathways to what that means and how you protect the token holder. And we want to do it. We're here for the long run, so we want to make sure that the choice that we make is going to be the best choice for token holders, but also for the projects. And as you mentioned, the Clarity Act is out in January. It's really early. It's 8 days away, 9 days away from January. So we're looking forward to that coming out, and then we can then kind of like pull the trigger on the absolute best option for the project and for token holders, moving forward.
And so can you give us a little insight into what the Clarity Act would actually mean for on-chain equities and just your project?
So from what I understand of the Clarity Act is that token launches, if you're selling to US investors, when the token comes out, you do need to do KYC for those investors. Once and there's maybe people listening in here, and I might not be getting this exactly right, but once the token gets to let's say 20, like there's not one single token holder that has more than 20% of the token, it then becomes a commodity, and then it can be traded openly. So if you are doing a token launch where one single holder has more than 20%, then it's basically a security, and then you have to kind of do KYC. But if you're just doing like a token where there's many different token holders, it's decentralized, then it becomes a commodity and it's regulated differently. That's my current expectation in January. And anyone kind of doing like token launches to US citizens, let's say on US territory, will probably have to follow like the SEC guidance on KYC.
Got you.
That's my current like
Actually
what I've read
aligned
into it.
with Hester Pierce's Fair Harbor. You know, it wasn't guidance, but it was kind of her opinion pieces she put out like years ago, which was exactly this. You know, what threshold does it become decentralized versus, you know, you have to do some sort of disclosures, etc. So go read some of her posts on that, because she actually has tons of blog posts. Do you have any demos or screenshots or UI elements you can show us? Can you give us a demo?
Loads. Yeah, I don't have it right here. I have my laptop. I have basically my travel laptop because I'm not at home for
So we only have 2 minutes until Radar hops on.
I think the best thing that I can say is you guys are demoing like the fair score. Anyone who's listening in, go to our Angel chat on Telegram.
Right here, boom. What's this? Is this this is the actual platform? Right?
We've already been through this.
Yeah. But the best way for people to get access to this. So one thing I want to mention is that because you know, we want to make sure we get the right investors, the best investors in first. It is closed alpha. The first launch will be closed alpha. So it won't be like a publicly available. So anyone who wants to get access to Fair, go to our Telegram Angel chat, and all of our good investors in the Angel chat can share invite codes for those that wish to join, get their Fair score, get their token score, get their social impact score. And that gives them plenty of time. By the way, everyone's scores are updated every 30 minutes. So there's plenty of time to improve your score to basically indicate to investors that you want to get into their rounds early.
Okay, so takeaways is the only way to get in is via an invite code. I think basically anyone that signed up within 1 hour when you made this announcement on the stage at Met Davi got 4 invite codes, right? So they're kind of in low supply here. So get an invite code, get on, and the first launch will be only open to those beta users. And of course, your Fair score is going to play a role into that. That seems to be the takeaway.
That's it.
Okay, and we're going to have 21 days for us to basically make that decision or to talk to the team, etc., to get in this project.
Yep, that's correct.
21 days seems a bit long from my current understanding. What are your what thoughts went into that 21-day number?
To give enough days for this was coming from the experience of some like DAOs.fun. We really loved what they were doing in the sense that they let you list your project. You know, I was part of the AI16Z round quite early on, and then I was part of a few more raises on DAOs.fun, and I think they had 30 days, and then that gives you time as a founder to go choose who is going to get into it, because it's a really important decision, right? We want to make sure that the decision that the founders make, they get the best investors in early. So they have to go do their due diligence, but it also gives some time for those investors to go talk about that project whilst it's listed.
Yeah, this is an interesting number. We see MetaDAO does 4 days on their raises. Obviously, there's a completely different mechanism there, right? The founders aren't going and talking to the investors. But I don't know. You typically see this issue with too long in crypto can be to the detriment. So I'll be interested to see how this works out and maybe how you guys adjust based on the first couple attempts here.
I agree with that sentiment. So
what's we know CPT or we know SOAR, for example, is trying to shoot for maybe 2 to 3, 4 launches a month. Is there a number you guys kind of have in mind that you want to shoot for? Are these all going to be curated? Are you guys going to be kind of decentralized here? Like, how are you doing these launches?
I think eventually we want to be permissionless. That is the goal. And the first launches we want to do, we want to really want to set the standard for what we've been building. It will define, I think, that'll kind of define our launchpad, and define the hypothesis that a project succeeds by getting the best investors in early, right? Which is the real hypothesis that we're challenging here. Once that's proven, we can scale this up like really fast. So to start with, there'll be 1 or 2 projects a month, and then we go, okay, this is really working. We can make this permissionless and scale this up.
Okay. Stud, well, I think we're pretty much out of time here. Maybe a call to action for everyone listening. What are the best next steps for everyone right now to get involved with Fair Dot Club and make sure they're positioned for these launches and everything that you guys have cooking up?
Go join the Telegram, chat with the community. I'm in there. The team's in there. Get an invite code. The community is willing to give out invite codes. Join. Find your fair score. Share it, and you'll be the first to know as soon as project is listed.
Okay, awesome. Art, can we expect more from the Twitter? The Twitter is pretty sparse here. I would love to see more demos, maybe more about the platform mechanisms, how everything works. Is that something we can expect?
That's more.
And I'll also drop the TG. Do you mind sending us the invite code into a private chat, please? I'll make sure it gets sent out to the MCG Alpha TG channel.
Perfect.
Yeah.
And if you guys aren't in the MCG TG, get in there. We as well have some invite codes that Stud's been gracious enough to hook us up with. So feel free to reach out, DM us or whatever, and we can maybe send a few of those your way. Sweet. Stud, we appreciate you coming on, man. It's always a pleasure, and hopefully we're talking soon. We're excited to see the first launch you guys have coming up. Would you say generally you're seeing some stuff we should be excited for?
Yeah. It's
January, February. What are we talking?
Yeah, definitely Q1. I'm going after this call. I'm going straight back into calls with projects. It's relentless. We've got a lot of interest. It's really good.
Awesome. All right. Well, we'll keep up then. Thank you so much.
Have a nice Christmas, all.
Yes, brother. You too. Peace.
Cheers. Bye-bye.
Yep. Merry Christmas. Love
Dude,
it.
you guys are cooking on that interview. Love Fair Dot launch. Excited to see what they have coming for Q1 though. I want to see what their pipeline looks like, what their first project will be. So excited for that one.
Yeah, it'll be interesting. I think the kind of takeaways for me is Stud clearly is interested in holder protections, whether that be some sort of ownership method. He said he's got 6 different routes: ownership, equity, debt, like whatever it might be. I think he's very interested in holder protections, which is nice. Number 2, just a focus on angels, right? Focus on individuals. What kind of value can you add to this project in exchange for, the earliest opportunities to get positioned into them? And so we actually see more of like a board seat situation and true angel investment opportunities, which we haven't really seen in crypto, which I think is really interesting. So like that's kind of the new standard here. And then obviously pipeline's important, right? What can they bring? They're working directly with incubators. I'm curious to see if they go to some VCs or like how they go and start outsourcing good projects to come and tokenize. Like that's a big one. And I think those 3 things are pretty interesting that they're doing. So I'm awaiting the next launch. I would say like genuinely, guys, at the least try to go and get an invite code, get on the platform, because the first launch will only be open to closed beta. So it doesn't hurt to at least be like able to get into it. Even if you don't think you're going to invest in it, like at least you have the optionality here. So make sure you go and, enable that for yourself. Sweet. You guys want to rotate here to Radar?
Yep.
Yeah, I was gonna maybe first just before we actually get them on, just kind of highlight the chart real quick. Let me pull up Moby, because man, this is like one of the strongest charts I've seen. Let me see. Let's pull this up here.
On a side note, guys, if you guys have good keyboard recommendations for me, I'm getting a new keyboard. I had the Huntsman Pro, really good keyboard, and it just stopped working on me, and I'm disappointed. I paid a lot of money for it. So any recommendations are appreciated for Dinero Dom.
Shout out Dom. Hit him up in the comments, hit him up in the chat.
One on gaming one too.
Oh, word, like that?
Yeah, I don't game at all, but like I know there's a possibility that when GTA 6 comes out in 5 years, I might actually feel inclined to. So
Well, by then we'll be in a bear market, so you'll definitely have a lot more time on your hands.
Or back
Probably
in
by
a
this-
bull market.
Or back in a bull. Or back in a bull.
Either way, I use keyboards a lot, so it's a good chart.
Yeah, but as you guys can see, like, look, we've been just climbing these levels here on Radar. You saw all the way down here. This is like sub 500K market cap. It's just kind of cleared that range.
When did we
and
have
then it
them on?
cleared? It had to
Pretty
be
early days.
It had to be I think it had to be back. Let me see. Maybe
Oh yeah, it was early.
I think it was like here.
Shout out Zen for setting that up.
Yeah, I remember Zen set that up a while ago. I don't remember the exact date, but we pretty much caught this one pretty early. And again, just clearing these levels. It set like an all-time high here. It cleared that. Then it ranged, set another all-time high, cleared that. Now it's ranging, and literally it could just continue to do the same thing. But there's obviously a reason why this chart is so strong. I remember having them when we had them on the last time. Love the conversation. Excellent founder. So excited to bring them back on again and bring the team back on and allow them to share updates and things. I believe we have them in the waiting room. Luke, how's it going?
Luke.
Good morning, guys. Good morning.
Welcome back. How are you
How
doing?
are you, brother?
Thank you. Yeah, good. Just been been building, obviously coming into Christmas. Things are slowing down a little.
Yeah,
Nice.
naturally.
Good to hear that you're still. Yeah, go ahead, Dom.
It seems like there's been sustained interest for Radar over the last couple, since we had you on the first time, which is hard to do in this market. Like, it's really impressive, actually. So we appreciate you coming on. I don't know why Josh is shaking his head like an idiot over there. What's going on, dude?
Just glitching over here, guys.
I know.
Talking over each other.
This is
you know?
unprofessional, bro. We need the cue cards. Embarrassing. We need one of these fake avatars for Chill so we can see when
I know. See when he opens his mouth, come on.
We got to set that up.
Yeah.
Chill. I'm just gonna let you shoot from the hip here then.
No, go take it, Dom. I didn't want to talk over you, man. I didn't want to talk over you.
Okay, Luke, thanks for coming back on. You have had a very impressive chart recently compared to everyone else. Not that we're here to talk about chart all day, but you must be doing something right. So you want to get into it, some updates, maybe a quick little elevator pitch for those who haven't been introduced to you guys. We have had them on before, so you can go and catch that previous recording on YouTube or X. But Luke, tell us a little bit about Radar, what you guys are working on, your shadow payments, all the different things you're working on, and then we'll get into updates.
Yeah, absolutely. So I think we came on about 6 to 8 weeks ago, maybe a little bit longer than that. At that time, we had our privacy-based X402 protocol. Since then, we've delivered 3 new products. So we've delivered, the ShadowPay application, so which incorporates, ShadowWire, which is PTP, so private PTP payments or transfers, ShadowSwap, and ShadowTrade as well. So all of this operates inside our Solana and USDC shielded pools. Not only that, but the best thing about this is we actually have 14 different tokens that have shielded pools on Radar as well.
Okay, this is a lot of like foreign words and buzzwords you're saying here. So you're gonna have to break down what the shielder pool is. Like, help me out.
Yeah, absolutely. So basically what we've done is, so the shielded pool is basically you, me, Josh, and Chill all have Solana. We all deposit our Solana into this shielded pool. The shielded pool is funded by us to begin with. And then essentially our funds are, I hate saying this word, mixed inside this shielded pool. And now, say I want to send 10 Solana to, say, Josh. Everything's done internal, so we use internal balance rewrites. So basically, no one can see that I sent 10 Solana to Josh, but I know that I've sent it. He knows that I've sent it, but no one can actually trace that on chain.
And why is this important?
Well, there's a number of reasons, right? So like crypto when I first got in, right, was pitched as this, privacy-based, protocol. I got in when, in the early days when, NFTs were bull running, et cetera, et cetera. Now, when you look at Solana, everything that you do on chain is traceable. Not saying that's a good thing or a bad thing, but there needs to be a time where people can have that opt-in privacy if they really want it. So so that they can not so much hide what they're doing, but shield what they're doing.
Cool. Okay. So you have a couple different things here. You have Shadow Wire, Shadow Swap, and Shadow Trade. Maybe before we even get into each individual one, can we talk a bit about just all the optionality you guys are offering here?
Yeah, absolutely. So yeah, we have three modules here. So Shadow Wire is, obviously our shielded PTP transfers. And then Shadow Swap is private bridging cross-chain. So the bridging's done directly from our shielded pools. And then Shadow Trade. So Shadow Trade is done the exact same way. So direct trading from the shielded pool. And it's only available for the tokens that we have listed at the moment.
Kind of walk us through, like, from a user standpoint, is this going to be like an app eventually? Is this just going to be like a app on chain?
Yeah, it's already all live. So as you can see here, we have, obviously Solana, Ore, Radar, Bonk, USDC, Godel. And then you can get into the Shadow Wire, the Shadow Wire component of things. So where you actually do your PTP transfers. So it's quite simple. All you need to do is jump in, deposit Solana or any of the other tokens into the shielded pool, and then from there you can either do a single transfer, or we've made it quite simple, and you can do batch transfers as well to kind of split the amounts and decouple that amount.
Who would you say is your biggest competitor right now?
So I've been pushing this quite heavily. It's Privacy Cash. So I actually made a finding, and basically they store all transactions, all IPs, all metadata inside of a database, which kind of goes against the fundamentals of privacy.
Got it. And I guess I'm just trying to get a sense of, the demand from users for a product like this one. Have you seen, like, just out the gate? You mentioned that you're live already. How's the metrics from the user side? How's that been going so far? What does that look like?
Quite well, but the thing about our protocol is we don't log transactions, we don't log volume, we don't log any of that. So I can't give you the exact amount. And I think that is what is needed with a privacy protocol. Is absolutely zero logging, taking away that IP logging, taking away that transaction logging, taking pretty much away all logging for privacy.
So where do you point to say, this is working or not working?
I mean, you can jump on and you can test it yourself. It's quite simple. We can go in here.
And if you need to share your screen.
Yeah. I think we were both trying to click it at the same time. But yeah, go ahead. And I mean, from the perspective, look, like, people like to look at on-chain transactions or certain metrics to try and drive a value for, let's say, the Radar token itself. So that's why, I was like, how do you know this is being used and is successful if you don't track anything, right? And I understand the reason why you don't track anything. I'm
Correct.
just wondering how you view that.
So I completely get that. And I think when the privacy matter actually becomes completely needed or, you know, critical, people will stop caring about metrics, because at the end of the day, like if a protocol is displaying all their metrics, then they are actually logging everything, which I'll go back to, and that defeats the whole core fundamental of privacy on chain, right? You know, if you're using a privacy protocol, the last thing you want is for everything to be logged.
It makes sense. Do you have like maybe then some revenue statistics? Like, are you guys starting to churn revenue? Are you profitable? Are you seeing growth in terms of revenue? Obviously,
yeah, we're seeing so obviously we take a fee at 0.5% of transaction fees, and I'll jump into the tokenomics side of house.
So right there, that's something you can point to and say, well, if we take 0.5% and the wallet that is capturing those fees is growing, then obviously people are using the product. Do you know how much SOL you've got in that transaction fee wallet?
We are averaging roughly between $700 and $1,000 a day.
wow, it's pretty impressive.
It's actually not bad, yeah.
Yeah, that's awesome.
Yeah.
Who are the people that like need this most, do you think, in terms of mixers? Obviously, I think previously when you think back, or not mixers, sorry, in terms of privacy.
Yeah, I was going to say, please, yeah, no, not a mixer.
I got confused because I was going to say early stage privacy was mixers, right? It was just mixers. Correct. And we saw criminals using those as some of the main user base. Yeah, when you think about people using yours, who's using your protocol mainly right now, and for what reasons?
Pretty much anyone who wants to hide their, I'm gonna say like their tokens, you know, their balances on chain. It could be, you know, anyone. Well, I mean, obviously the average trader isn't gonna use this, right? So, you know, you're looking at like people who are looking to, you know, bridge their funds off chain privately. You know, you're looking at the people who, you know, have tens of thousands, hundreds of thousands of dollars, even millions of dollars.
Yeah, and the use case here is not always nefarious. Like part of it is if you're a size trader and you're trying to enter a position on a small token, and as soon as people dox your wallet and find out that's you, you know, the price spikes and then people front run your trade. So that's one use case. Anytime you're paying anyone, you might be paying someone to post tweets for you or to do clips and stuff like that. You know, you don't want them seeing what your treasury is and this and that. So there's like a number of nefarious use cases for this type of product, just for everyone listening. I think the reason there's a stigma around this is because, you know, the government always chalks it up to be that, but I think there's a very valid use cases for having private transfers.
Well, like obviously, right? It's like obviously your bank account, you don't go and buy something from the store and it shows your entire bank account and like purchase history.
Exactly. Right.
It's just like, I think it's just kind of a weird paradox to believe we would eventually live in a world where everything's on chain and just like you can see, you know, a window into your entire finance.
Yeah. Or you don't want to get beat up, you know, at the next crypto conference. Like,
yeah. Well, that's exactly right. Like, and, you know, say for example, like, you know, Dom, like your wallet gets doxed, right? Say not only like your main wallet, but all your side wallets get doxed.
Yeah.
You know, how is that fair on you, right? You know, basically, you know, someone will come in and they're like, oh, look what Dom bought and sold. You know, why did he do that? You know.
So maybe walk me through the process then. I'm an average guy. Maybe walk me through a few scenarios, right? I want to buy a token. I want to send money. I want to perform a swap. Like, walk me through a few scenarios of what people would do where your protocol comes into play and how it helps, changes things, etc.
Yeah, absolutely. So I went through the deposit before, so you can see the Solana's now inside the shielded pool. So, you know, that was through the deposit tab here. So you can use Shadow Trade. As I mentioned, we only support tokens at the moment that are listed on our platform. And this goes back to a case study that we did as well. And what we found is that our protocol basically delinks all bubble maps as well. So to kind of like counteract any nefarious use cases with ShadowPay, we've gone about it and we've manually verifying tokens at the moment. And that's basically to stop people from getting around bubble maps.
Okay, so step one, you deposit to a shielded pool. Right
Yep.
now, you're free to kind of transact here through your protocol anonymously.
Yeah, so you can come in here, you can select, Solana, USDC, and then you can execute, the buy/sell. So you can do both way swaps, and you can even swap between tokens. From there, if you wanted to do a send, say I want to send, 1 Solana to Dom, I would come in here, I would select 1 Solana, I would go internal. So we have an external option, and that allows you to basically send your funds to a centralized exchange.
And I could send you my wallet now if you want to just go through with this demo.
I mean, I can. Yeah, we allow basically the sending externally, and that's to once again offboard to a centralized exchange. So we did some testing with Coinbase, Binance, Kraken, just to basically ensure that the external transactions landed. Because what we actually do is we don't send a typical transaction on chain. So basically everything's done through our program on chain, and we rewrite it via a heap frame. So we just wanted to make sure that, we wanted to make sure that those funds actually landed in the centralized exchange wallet.
Okay, so you kind of just talked a little bit about the process that these transactions undergo before getting to their destination, et cetera, to make it like privacy preserving here.
Mm-hmm.
You said heat wave stuff we're not going to understand. Can you kind of maybe walk through the brass tacks of this without being too much, leaning too much into the engineering jargon here?
Yeah, absolutely. So more so the privacy technical stack. Is that what you're asking?
What happens once I send my money?
So it gets routed through our Rust contract to our back end. Basically, I'll show you the process. We'll come in here, we'll send.
Send in 500 SOL. Nice. Need an address to paste in there?
I'll send. You want to send me your
clip? It's in your clipboard.
So this generates a sign message. You accept that. And then pretty much everything then is executed via our back end. So it goes through, the proper checks, and then it goes through like the balance rewrite. And there you can see the transfers completed. So we'll jump out, jump in here.
Now, does this send it? Does this transfer it directly to the wallet or to their pool?
There you go. To
inside?
their ShadowPay pool.
Okay.
So even if they're not a user, if you use that internal send function, it'll create pretty much everything that's needed for that user to essentially log in, and then they'll be able to withdraw, or they'll be able to do whatever they want inside that pool as well.
And on SolScan, on SolScan, what would users see? Do they just see the transaction going from wallet to a bunch of, an address with a ton of transactions?
No, not at all. Let me show you exactly what is displayed on chain. Sorry, can you see that SolScan there?
No, we can't.
You might need to hit the share this tab button at the top, and it should flip over.
There we go. Beautiful. Ta.
Yep.
So this is what you'll see in SolScan. So you see a heap frame request, and then the input account, that's our relayer. And from there, you won't see any links between the sender or receiver or the balance that was sent either. So all you've got is basically a program log, and then we'll go into the balance changes.
So
and then,
fully
yeah,
untraceable.
correct.
That's pretty fascinating. I think the biggest like selling point here is, hey, how can you get this? It's one thing for a bunch of people to go to your platform and use it personally, right? How do you get this on the back end integrated into everyday platforms that people use? Phantom even, right? Like, what's maybe the goal and thought process there with integrating this further into just everyday activity?
Yeah, absolutely. So we have standby. So we've got our Shadowwire SDK. So it's available for anyone to use. It gives you, quite a simple. You can literally fork it, and then you can essentially build whatever you want on top of the ShadowPay infrastructure.
So this is fully open source.
Correct.
Do you have any idea of people, projects, platforms currently using this? Does that go against Radar to even talk about the people that would be using it, or?
So what we're actually integrating with a Solve protocol called Godel. So they're going to be using our SDK and our backend infrastructure to essentially be able to transfer Godel completely anonymously.
And you guys still retain like fees from doing this, of course?
Correct. Yeah. So we retain 0.5% fee on those transfers.
Can I tag them in the show notes? The Godel. What's their @ handle? And if not, you just let me know and I'll just leave it. I can't
absolutely.
spell. I don't know like how to spell Godel.
Godel.
And obviously you're like Aussie or something like that, so it like gets obfuscated a little further with your accent.
Yeah. I'm from Sydney, so
Sydney.
There we go.
Let's go.
Hey, I used to work in DeFi with a bunch of Aussie guys, great dudes, but man, on calls I was like asking them to repeat everything.
I know.
yeah, we
Chill,
do kind of. Sorry.
Yeah, no, I know. Chill and I have some mutual Aussie friends here in the cryptosphere.
Shout out the guys.
Shout out the guys, man.
Totally. If Irish is the worst, like a thick Irish accent, there's like Newfoundlanders are bad, and then like the Aussies are right in there.
I have no issue understanding Australians like at all,
Same,
dude.
to be
It's, like,
honest.
weird.
God,
I love
don't
the
know,
accent,
like,
actually.
Hit me with that.
I
No,
love
and to be honest, I'm not Duncan at all. I love Aussie accent. I just,
Luke, curious what the BD side looks like when you're going out, finding companies that could use this this feature. Like, are you guys reaching out personally to companies, or are you waiting for them to come to you? How do you grow and scale a business? What does that look like?
Yeah, so we actually have Zen working for us at the moment. So he's working on that, on the BD side of house, reaching out to different protocols.
For those that aren't familiar, Zen put us into contact with Radar. He's a supporter of MCG, and he actually connects us with a few projects. So that's pretty cool. So he's fully doing BD for you and getting you guys integrated into protocols.
Yeah, exactly. So he's reaching out, obviously through his network, and then cold calling as well, or cold reaching out to different platforms, tokens, protocols that can essentially integrate our tech stack.
Is there like a specific type of project that you're looking for, or is it just any project? And then also, well, let me ask that. I'll let you answer that question first, and I'll ask another.
Yeah, so obviously we do our due diligence as well on the project, and I'll do quite a deep dive into what they're building, and especially if they have a token tied to them as well. The last thing that we want is to be tied to a protocol rugging.
Got it. And I guess I don't know if I forget if we talked tokenomics. Did we touch on that here, Dom?
We had started to get into it a little bit, but I think we maybe got sidetracked.
Yeah,
So
I
we
don't
can-
think we closed the loop on that. So can you also kind of just, because I want to connect what you're doing on the BD side and kind of see how that brings value to the token. I think it's just a really big conversation happening now. So I just wanted to let's kind of just break down the tokenomics a little bit.
Yeah, absolutely. So you can go check out our tokenomics on radarlabs.io/tokenomics. But yeah, here's a brief rundown. So, pardon me. So 20% of the protocol fees go to holder rewards, 30% goes to buybacks and burns. You need a minimum 250K for eligibility for that. And then you can see the weighted multiplier there. Oh, sorry, go.
Do you guys are you guys, I know, let's just say as the price of Radar goes up over time, that 250K worth of tokens, that will change. Do you guys feel like that will fluctuate at all?
Yeah, absolutely. And obviously, if that does happen in the future or the near future, we can obviously take a relook at the tokenomics side of house. The last thing that we want is for people to be people to get priced out. Say 10, 20, 30, 40 mil market cap. Obviously 250K Radar becomes unobtainable for the average person, and then you obviously got then whales start hoarding. So the last thing that we want is unfair distro in that case.
Got it. And I kind of like cut you off a little bit, and I'm sorry about that. When you're kind of talking about the weighted tiers, go ahead and feel free to break that down for us a little bit.
Yeah, so what we do is we do a weighted tier multiplier. So you can see a little example down there. So holding 5 mil Radar will give you a 2.5 weight, so you'd receive twice as much of the allocation as if you were holding 250K. I feel it gives some benefits for holding, and the last thing that we want to do as well is limit people for staking, etc. I think staking is a terrible idea. And I've seen a lot of people get burned with, a staking mechanism.
Yeah, staking tends to not be, as good as it may seem. I'll say that because a lot of projects kind of just, they just kind of slap staking on there without actually thinking about it. So yeah, there's this huge conversation just happening right now. We're seeing like projects get acquired, and there's nothing that goes to token holders. We're seeing, there's recently a project that rugged that we talked about, and I don't think they came in with the intention of doing that, but really what it is a critical hit to the business, and it's almost like, well, they can make the decision to change at that, change anything about this sort of agreement with the token. So it does kind of require a lot of trust from the token holder side to the team. And I just kind of wanted to hear your thoughts. Like, how are you thinking about, the value capture for your token? How are you thinking of your token in terms of how that relates to the community?
Well, hit me with the hard questions here. I'll go back to, so I'll circle back to the first point. So you said that the token, like the token holders, aren't basically getting their fair share, right?
Yeah, basically.
I mean, like, so when a project, so say for example, like gets acquired, basically what you're saying is how would the token holders be rewarded? Is that right?
Yeah, so I guess just to zoom out a little bit for the audience sake and maybe give you a little bit more context. So we see that a lot of projects, really the end game for a lot of these is to either be like a private revenue generating business, to get acquired by some larger company, or failure outright, which that happens more often than not. So I guess, with those kind of end games in mind, the token is kind of supposed to give holders, upside in the actual underlying business. And I guess that's the conversation that's really been That's really been, the big conversation happening recently. So yeah, I just wanted to see your thoughts on how do you think about that? Like, where do you see your particular product going? Do you feel like it's more of going towards kind of private company generating business, or is it kind of something that would potentially be acquired? We see like Uniswap, for example, they haven't given token holders like any of their their revenues for a while and things of that nature. So just wanted to get your thoughts, see what you're thinking about that, how you're thinking about that from a founder perspective.
So from a founder perspective, so my end goal isn't to get acquired. I've been building this project for, is it going on like nearly a year now? It'll be a year in March. I've never thought about like that as being the end goal. It's always been about, self-sustaining revenue generation, and, basically becoming the go-to lead privacy protocol.
Got it. And so I remember earlier in the interview, you mentioned that you're generating, I believe you mentioned like, I think about 1,000 a day in fees.
Yep.
What's the fee? Obviously you're doing something right. What's the feedback been for customers?
So it's been mainly like nitpicky UX, which is, honestly fair enough. And, everything all the feedback that we've gotten, basically we've taken that and then, we've made those UX changes to make pretty much everything more simpler for users.
And I'm seeing a lot of, apps coming out, apps like, Phantom, FOMO.
Yeah.
We even saw Believe at one point was making an app.
Yep.
How are you thinking about that? Like, are you thinking about like making like some, an app to make it, more kind of accessible, user friendly, or is it just kind of, or I should even say mobile?
Yeah.
How are you thinking about that?
Yeah. So we actually have our application pending approval in the Google Play as well as the Seeker store at the moment. So it'll be v0.1, which uses the new Phantom Connect protocol that they've released. From there, once we have everything nailed down, we'll release V1, which will be, pardon me, a local wallet essentially, and it'll basically give self-custodial to them.
Got it. That's awesome. No, that's awesome. That's huge, actually. Pending approval there. Is that something that is generally kind of, out there? Is that something your community knows, or is this kind of breaking news here on MCG?
It's been teased, yeah. So if you look at the main website, you can download the Android SDK or Android APK. Apologies, and then you can go through and install it, sign up, and from there have those shielded pools on the go on your Android device.
That's really cool.
That's actually really dope. But look, I mean, we definitely want to respect your time here, Luke. I think we've gotten a lot of good questions in here today. Unless you guys have anything else, Josh or Dom, I think we're.
I think on a closing note, it's just like, look, privacy needs to be the standard. There was a cyberpunk angle, I think, in crypto in the early days where it was like everything needs to be on chain. But even the cyberpunks kind of did this anonymously and with a privacy aspect to it. I think the more we've evolved, we've seen that, well, not everything is actually as anonymous as it seems to be. And I think privacy is something that we need to make a standard. So it's interesting what you're doing. I think it's fascinating. Luke, maybe closing thoughts on how people can get involved, why people should start being more private about their transactions, and then a call to action on how they can level up their privacy on chain.
Yeah, absolutely. So you can follow us on obviously X, so radar.fun or Radar Labs on X. You can join our Telegram community. Discord community will be launched fully in the coming weeks. As for privacy, so I think I mentioned earlier in my thing, privacy was, crypto was kind of, promises this like, privacy product on the magical internet. But, it's essentially not that. Everything's logged, transactions, sender, receiver, amounts, IPs are logged, everything's logged on chain. So, if you want to stop that, use Radar.
Awesome.
There we have it.
Well, look, Luke, we really appreciate you coming on today. It's been a wonderful interview. Just kind of getting to know more about Radar, about what you guys are doing.
Sorry, you got a Solana tweet, didn't you?
Yeah, we did. Or totally, yeah.
Totally tweet. Are you part of the privacy on Solana cabal that's forming? There's like you guys, Umbra. Who else?
Well, Zcash isn't on Solana, but ZC was a big one for a while.
ZC.
Zec, yeah. So we offer shielded pools for Solana Peg Zec.
Oh, there you go.
There you go.
Wait,
All
so
right.
why would Zach need shielded pools? They don't have like privacy of their own integrated into
not on Solana. No.
Makes sense.
Yeah. So if you were to buy Zec on Solana, that's completely, on chain. It's not shielded.
Sweet.
Got it.
Luke, thanks so much, brother. We will be in contact, and as always, it's a pleasure talking.
Yeah. And
privacy
congrats on your
is
success, by the way. We've been watching you guys go from a Zen intro first show to, running it up. So congrats.
Thanks,
on
guys.
that.
Appreciate
and
it.
sustaining as well. It's in this
Sustaining.
market, tough.
Number one.
Right? So you guys have done it.
100%. All right. Thanks,
All right,
guys.
Luke.
You have a good day.
Yep. We're excited to see what
Cheers.
happens when volume comes back for you, brother. Take it easy. Peace.
Thanks. Bye.
Cool.
All right. There we go.
I like Radar, man. Radar's looking good from a chart perspective. Radar's looking good from kind of fundamental perspective. I like the way he answered our questions too. Seems like a genuine guy.
Radar could have a sneaky year in 2026. So if you do the mental math, they take 50 bips on, let's say, $1,000 per day. So that's $2,000 is 1%. You get to $200,000 daily volume, which that's 1.4 million per week, which is times 56 weeks. Is it 56 weeks? Yeah, you can maybe work out there's like 50 to like $80 million in volume per year there. And if they grow that, it could be a significant amount of money flowing through.
Yeah, there's a lot of talk just around privacy, not necessarily in crypto, just in general. I forgot where I saw it, but there's just a few like kind of non-crypto native narratives around privacy forming that I'm kind of taking note of. And I think that could be a sleeper narrative. Might not even be a sleeper, but a narrative for 2026 to watch out for.
Yeah, for sure. Sweet. I got, I think, one or two last things to talk about and maybe cover after this. But I spent a lot of time over the weekend just fleshing out my Meteora bull case. It's been one of the assets I'm like pretty excited about, and I think it's one of those ones where you can get some good liquidity in there, some good size, and it's really there for liquid gains. Buy 1 mil and retire from RevShare. Hopefully,
but 1 mil.
Yeah.
Right.
But 1 mil.
Whatever your thing is.
Are we bringing RevShare back? Remember the RevShare meta from from
the thing is
days?
RevShare. The thing with RevShare is, unless you hold an extremely significant amount, the amount that gets flows into your wallet is so insignificant a lot of the time. It's like it almost equates to like what you get from holding money in your bank account, right? It's just meaningless. And so, unless you have standards like on you have to hold a very large amount, or you're doing like an extreme amount of revenue and it's going back to holders, it's going to be like very little going.
RevShare is like the Roman emperors with coins, throwing it at the people so that the people don't revolt.
So
yeah, right. They can say they
we
have RevShare, but it's really meaningless.
So can we like have this discussion real quick about around utility? Okay, so I've been doing a lot of thinking about this, and I've even posted about it, but not really sure if those posts really hit home the way I wanted them to. but there's ownership, right? It gives you true exposure to the underlying business. But then you have other utilities like token gated, like hold this many tokens, get that. You have rev share, you have buybacks, you have staking. Like, how are we classifying these utilities? Like ownership on top and then everything else on the bottom? Like, is even like is something like token gated access, like hold this many tokens to access my product, is that really like like a worthy utility to give a token intrinsic value, especially if it causes more friction for users? Like, how are we thinking about
I think the
this?
truth is we saw a lot of Web2 projects come to Web3 with Believe because they saw the hype, they saw how much money some of these deployers were making. And the truth is they tried a few different ways to integrate token utility into products that just weren't meant for a token, and it simply doesn't work. The question has some nuance to it. Different tokens are going to have different like tokenomics that work for them, right? You see L1s and L2s whose token is the base currency, right? Well, you don't need to have equity in a company. You are growing completely off of network usage, right? So in that case, Berlin says rev share is nothing when Solana and Bonk are generating from fees. That's who will be educating and pushing the radar. I'm not sure if I'm understanding that.
I'm not tracking.
But nonetheless, yeah, I mean, you got a couple buckets to fit tokens in, right? Layer 1s, layer 2s, where their token is literally directly tied to network usage. There's a few others you could fit into the network usage bucket, but very few, right? And so pretty much bearish on anything that's got a token for network usage unless it's layer 1, layer 2. Then you have token features, right? I hold this token, I get gated access to a community, I get gated access to a technology, and or it's like use my token to pay for some sort of technology, and it's so meaningless. Like, it has such a meaningless effect on the token price and like actual burn or buyback for the ecosystem. It almost is never like bullish. It's kind of just like a band-aid, and it shows people, hey, we have token utility, but the utility is really non-existent because it does nothing. It has no effect. And then 3, you have like the equity side. Sorry, go ahead.
I think that's the thing that I've been just trying to hint at recently. Like, we need a full reset on how we think about quote unquote like utility projects, right? Like, really, they're startups, and I've been saying that since ETH days. But it took me up until now to kind of realize that, what does that mean if we are to consider them a startup? Like, what does that mean for them? And I think it's important. Like, for example, with the Radar founder, he's like, look, I'm not looking to get acquired. He's like, I got a standalone product that's like really, useful in Web3. They have some traction with other with their BD, and they're already like earning some generating revenue. So he's not looking, for that. But there are projects like, remember the medical project that we interviewed that was from Believe, and he had a great product. It was like AI, smart practice.
The guy who rugged?
He rugged.
I don't know if
he
did.
He rugged, yeah.
Yeah, so I hope you weren't using him as a good example there.
Yeah.
No, wasn't using him as a good example, just as a case study to say, like, he had a great product. Like, there was like he had access to like basically he had a monopoly on the entire like dentist industry based from just his product and everything. That so the product is good, it's genuinely useful, but this whole integration with the token just was not it. He was like, imagine trying to get a dentist office to sign up for a Phantom wallet to then buy your token. Like, that's what he said he was doing. Like, he was using kind of these step-by-step instructions to have them like buy his token on chain. And that's just not the way. That would be much better used as a straight up discount. Be an early user of our product. Let's get you a straight up discount. And then, like, from a token perspective, that'd have been much better on SOAR. That'd have been much better. Raise some capital on SOAR, and then bang, you're good to go. Right. But it's just like, what else are these I mean, I'm not trying to give them an out or anything like that, but I don't think these projects are rugging because they want to come in and scam and grift. I think they're rugging because they're web 2, bro. They don't know the rule of thumb
Or
you
the
know?
consequences of pissing people off on the internet when
Yeah.
you take their money. Like I mean, I wouldn't be. Yeah, I mean,
You can't
there's-
invite an army of Web 2 founders with good products, say, hey, launch a token without them knowing a thing about crypto, which is what happened with Dupe, and then expect them to like automatically know like what it means to have a token and what it means to make that token valuable, right? Like the two just don't mesh.
Yeah,
Let's,
I think what fascinates me and a good future for tokens is kind of this dual structure, right? So you have actual equity in tied to the company, but then you also have a product growth of a token, right? Like something like Dupe, where it's like our token is actually points for our platform, right? You earn Dupe points and you can spend those within the platform. So now you have both, hey, well, this Dupe token is equity and it also is spendable points. So we have multiple different angles coming at the token. And then you obviously pair that with a product that has really good growth metrics. And now you have the best of both worlds. And so you have points that are fundamentally valuable because they're actual equity and ownership in the company. And they're also directly tied to revenues and growth because this is marketing spend that would be spent to acquire and retain users. Now it's spent on rewarding these users with tokens that they can spend in app, which are actually valuable because they are equity. So now you see a model where instead of getting Chick-fil-A points and it's just a point program where they can go redeem it for a sandwich. They actually hold a very small amount of the company in every piece of points. And these points are now valuable from an equity angle and both a growth perspective. And so then you have like the best of both worlds. I think that's like the direction we end up at some point.
Yeah, I would hope so. I would like to, yeah, I would hope so. Like real utility, like it actually is used for something, but in a meaningful way that doesn't cause more friction, but at the same time, like exposure to the underlying business. Yeah,
Okay.
I think you're right.
Berlin's trying to explain his thesis here again. Let's try. He said, read it slow. Let's see. Solana makes fees from gas. Yeah, network usage. Bonk makes fees from volume. Yes, of course. I wouldn't even say Bonk. Bonk's not a great example. We could use something like Pump Fund maybe. Solana makes fees from gas. Pump Fund makes fees from volume. People using Radar will generate fees for Solana and Bonk. And those holding Radar. Everyone in the ecosystem generates fees with real utilities such as privacy.
You tracking?
No. So Solana makes fees from gas. Bonk makes fees from volume. People using Radar will generate fees for Solana and Bonk. Radar has no
He's
benefit.
just saying in the swap, I think the private swap thing, it goes routes probably through Bonk and stuff like that. It's just, yeah.
Okay. Whatever.
Yeah, it's just one of those.
I don't know. Look, bullish on Radar if they can go and integrate their product into a bunch of protocols. I think that's the key. These protocols want something.
Yeah.
They have a
Yeah.
solution. Go and integrate it, and boom, yeah, you have a winning product.
So I think I know what he's getting at. I think Berlin. I'm gonna, Josh and Dom. They've taken a stab at it. Here's my stab. You're saying that Solana and Bonk, they generate fees in the way that they do, and you're saying that Radar can also generate fees in a similar way if more people use the swap feature. Solana and Bonk will push Radar for privacy because everyone makes money. Oh, you're saying it's like a stackable. He's saying it's stackable, like where, people make money from, or rather Radar makes money from the swaps. Solana still makes money even if Solana gets swapped within the Radar protocol, and same thing with Bonk. So he's saying that,
so it's a leverage bet on the Solana ecosystem, right? It's a leverage bet
Basically.
on integrating Radar into all Solana products. And then the growth and usage of the Solana ecosystem, whether that's Bonk, Pump Fund, whatever, uses Radar technology, and that also increases Radar's revenue.
Boom.
Success, etc.
We finally understood it,
Okay.
Berlin. How many crypto degens does it take to understand Berlin? 3,
100
apparently.
crypto degens versus Berlin. There we go.
Oh my God. Talk about a 20
Yeah,
to 1, huh?
that's, I mean, absolutely a great point, and absolutely something that can be applied to any protocol if it's integrated amongst the entirety of a Solana ecosystem, right? But yeah, no, I think like the bull thesis there is correct. Of course, if Radar can get integrated in a big way across the Solana ecosystem, it benefits from just Solana usage in general. But there's a big step in between getting it from Radar, the product, into mass integration in all of Solana. And so, like, can you fill that gap? But I see the vision.
There's actually like an adoption chart that, actually like a chart curve, whatever you want to call it. I'm actually going to try to pull it up here. I think it shows it really, really well. And actually, boom, here it is. Let me share my screen. Adoption curve. And here we are. All right. So here's my screen real quick. And I think this is something that's really important for something like Radar. So you have like, innovators here, early adopters here, but then this chasm. This is sort of like an inflection point, a pivot point, a decision point for really anything that's early. It has to cross that chasm. And I think that's what Dom was alluding to earlier was, we're kind of like early adopters of Radar. We're in that early adoption phase. If it were to cross that chasm, that's where, or I should say, in order to cross that chasm, you are going to need, your BD to be on point. You are going to need, more like protocols using your project. You are going to need to expand to cover the entire Solana ecosystem and network. And I think that's what Dom, I don't know if that's something, if you're kind of alluding to that, Dom.
Yeah, pretty much. You got to fill a gap. It's a lot of BD work and a lot of just mass adoption to get from concept to this full ecosystem integration. But yeah, it's exactly
100%.
right.
100%. So
Sweet.
Let me see here. What you got?
I have a full bull thesis. Like I said, kind of got sidetracked here, but I did a lot of research on the numbers for Meteora, the statistics, growth, just like verticals, and I did a lot of thinking on Meteora and the bull thesis here, because I've been sizing into Meteora around the 100 mil mark, and I think anything sub 100 mil starts to feel very valuable. And so I've laid out both sides. The bull case and the bear case. And I think the bull case greatly outweighs it. So allow me to present my thoughts here, my findings. So firstly, I've got some financials. Share screen. I've got some financials from Meteora. So we got a few things that we're going to follow here to kick us off. Firstly, this tweet I think is really good. So we'll start here actually. Over the past year, Meteora has ranked as the third highest fee generating protocol in DeFi. The difference, the majority of those fees flow directly to our LP army. In 2026, we're doubling down to capitalize on the scale and help our LPs print harder than ever. As you can see, they're number 3, the highest fee generating protocol in the last 1 year. They made 1.225 billion, and they ranked number 3 behind Tether and Circle. Okay, actually above
That's
Jupiter
actually insane.
and above Uniswap. Interestingly, I have a thesis on both of these as well. I'm not sure if
Jupiter is also a Meteora. They're very similar in companies as well.
Yeah, there's some alignment there. But I have a thesis here. Uniswap actually has a what's it called? A vote that's being passed right now and will likely be passed to turn on the fee switch, I believe it is, and route 20%, I forget the exact number, but a percentage of fees generated from swaps directly back to the token, which is why you saw the Uniswap pump over the weekend. My thesis here, and this is a separate thesis from Meteora, is that this will become the standard. If Uniswap does it, Jupiter will be forced to do it. And so Uniswap doing this is also bullish Jupiter. Of course, there's a lot of speculation in that, but I think clearly if Uniswap, the most iconic, platform to make swaps on Ethereum, does this, it's going to have to become the standard amongst everyone else. And so I think Jupiter will follow. That's kind of a bull case for Jupiter. Okay. Nonetheless, not what I'm here to talk about today. We're talking about Meteora. So they generate 1.2 billion in fees, very successful. And there's more info on a lot of their financials here on the Meteora Inside account. So we're going to read through that, and then we're going to take you to their actual financials and the numbers and show you some of those. Okay. The Meteor Genesis summary is here. I'm not going to read the whole thing. So you got the manifesto, not going to get into that. Words from the lead, Soju and Zen. I'm sure they're great. We're not going to get into that right now. Ownership and structure, MET token. So tokenomics, first thing we want to cover. What are the tokenomics here? Well, the MET tokenomics, they're circulating 1 billion supply, 48% circulating fully released at TGE. Now, we'll talk about the vesting real quick. There's 1 billion supply. We'll call it roughly 50% circulating right now. There was a cliff, but over the next 5 years, there's going to be about 10% released per year. Okay, so that's the inflation of MET. So in the next year, we're going to go from 48 to 58, basically, or call it 50 to 60. Okay, so 10% a year. So keep in mind, that's the inflation you're working with here. You can see who it's going to. When you look at the MET chart, MET is pretty much down only. Now, we have a few factors to that. Well, bad market. But I think more importantly is airdrop. People are cashing in on the free money they got from an airdrop, especially in a bad market. They're saying, okay, well, I got this money for free. I'm just going to cash it out and sell. And they're not really looking at what they should be looking at in terms of Meteora. So I think we're getting large airdrop sell-offs, which we see with every protocol. It does a large airdrop. This is not Meteora specific. Number one. Number two, a very bad market, right? And so I think that's why we're seeing an overselling of Meteora. Okay, so keep that in mind. We see who is getting allocations here over the with the 50% that's yet to unlock over the next 5 years. Okay, again, 10% a year inflation. Token transparency. Again, talks more about that. I basically cover that briefly. And then how to understand Meteor as a business, right? As a business, Meteor earns from liquidity flows, token launches, and on-chain activity. 3 things to highlight here. Meteor's made a lot of money from liquidity. They're a liquidity providing platform. But recently, in the latter half of the year, call it 6 months, post 6 months, they've started making more money from token launches, which is a very interesting direction I want to highlight with Meteor and current revenue. They made a lot of money for token launch. So they have liquidity provision. I think they've got Raydium beat by a long shot in terms of innovation. They continue to innovate. Liquidity is flowing through Meteor, so they're good on LP. Now they're kind of moving to token launches, which is a big vertical I think they head in. We're seeing every launch pad that's popping up using Meteora as a tech stack underneath it. Right now, the competitor is Pump Fun. I guess they got Heaven is using their own AMM. Everything else is, Bonk is Bonk Raydium, or I don't know, but Bonk's not Meteora. I think they're Raydium. So Bonk is Raydium. So you got these 3. Pump Fun's really the only serious competitor. And truthfully, after everything we're seeing with Pump Fun, like, we just know the direction of on-chain is fully favoring ownership coins, equities, a different structure than we have. That's not coming to Pump Fun. That hasn't been coming to Pump Fun. So the positioning here is, can Meteor capture this other side of the business? So it's not only liquidity now, but the launchpad side and launchpads going forward using their tech stack. I think that's a yes. I think in the new year, Meteor wins in that field. So you see what was once really an untapped business model that only started getting tapped into with Believe, I think, and so on, is hopefully going to be a leader for Meteor going into the new year. So that's the other play, right? The Meteor's growth and leadership in terms of being a dominant launchpad player. Again, if MetaDAO wins, if Soar wins, if Street wins, if Star.Fun wins, if Believe comes back and wins, if any of the future, if Fair.Club wins, if any of the future launchpads wins, that's Meteor winning, right? Because they're built on top of Meteor tech stack. Not only that, they're using Meteor liquidity pools, right? So that's part of the bet. Do we see the growth in launchpads going to Meteor? And I think yes. So that's something I want to factor into this analysis here. Over the last 12 months, we've generated more than 1.2 billion fees, with 1 billion going directly to our users, powered by data from Blockworks. Blah, blah, blah. Core business pillar, liquidity and LP army. We talked about that. Business pillar number 2, launchpads and the Meteorite Collective. This is what I think they're dipping their toes into, and 2026 will be very good for them in this. So they have 14 plus launchpads, 420K total tokens, and 20% of revenue share per launch. So out of all the launches from the launchpads, they're keeping 20% of revenue. 20% of MetaDAO, 20% of Star, 20% of Fair.Club, 20%, so on and so forth. And we're seeing complete domination on this side from Meteor. Pump.Fun is not launching utilities. Nobody cares about memes. Nobody cares about shitcoins. It's all coming to Meteor. Okay. Multi-sig security, blah, blah. So boom. That's kind of the wrap up. Now let's get into financials. Okay. Meteor is trading at 100 million. We know there's 10% inflation. Yet I go through their financials, right? And shout out Blockworks for some of the stuff. You guys can go check it out yourself. I go through their financials, and let's be fair here. Let's take out a few things. Let's take out Trump because that was a one-time liquidity event. We're not going to get another Trump that's going to make them X amount of money. So take away $8 million from their yearly revenue. Okay, take it away because Trump generated them about call it $10 million, and you can see that here. I'll go to a weekly chart, and look, you can see.
Can you zoom in on that too?
Yes, I can. Okay, we can see. Oh. I'm bugging out. Here we go. Okay, we can see a weekly chart. I believe Trump was right around here. Yeah. So we saw there was a 5 million 7-day period, 7 million, 8 million, and then the previous days were like 3-4 million. So Trump probably accounted for about 10 million. I think you can see, yeah, down here, you can see Trump is 8.3 million of total revenue. I would assume there was a good bit from Libra and Melania as well around this time. So let's just chalk it up to 10 mil. Okay. Chalk it up to 10 mil. So we can see their financial overview here. I'm going to zoom out just to get a broader so I can try to spot what I'm looking for here quickly. Trading activity, liquidity providers. Because I broke up their revenues from LPing and like trading or launch pads. Where was that? Nonetheless, they made like 120 million, I believe. 110, 120 million last year. So even if we take that 120 million, and I would love to see that number. Where did I see it the other day? Was it here? Quarterly? Total fees per quarter. DLM pools. Total revenue, Q3, 28 mil. Or Q3, 30 mil. Q4, 40 mil. Q1, 36 mil. 15 mil. And then, I think we're getting closer to current quarters or earlier quarters, 2024. Yeah. So since 2024 Q4, they made 15 mil Q4, 36 mil Q1 25, Q2 25, 38 mil, Q3 2025, 30 mil. So we got a slight drop off consistent in Q1, Q2 with a slight drop off here. Nonetheless, they made 110, 120 million last year from both their launchpad and from their LPs combined. Let's take away 10, take away 20 mil even from the Trump, Libra, Melania stuff. So they made $100 million last year. Current price to earnings is 1. They're trading at $100 million market cap. The bet here for me is that, and I'm being very reasonable, I feel like, taking away the Trump. The bet here for me is that Meteor liquidity pools continue to dominate. Raydium is a thing of the past, and we can see the growth on these financials as well. I don't know why I keep switching on me, but look, this is Meteor liquidity pools back in September of 2024. Look at the growth. Meteor has since become very prominent. And so revenue should obviously continue to follow suit, of course, with this big week/month here being Trump. But nonetheless, it's continued to grow. Right now, we're at a low period just because markets in the volume in the markets are low overall. And so you have a few things you have to factor in Meteora. Number one, if volumes stay low, Meteor revenues stay low, right? That's just the nature of the business. Number two, we're not going to get another Trump. So this is like the bear case. Bull case is Meteor continues to dominate in terms of growth, right? Assuming Raydium doesn't really pull anything out of their sleeve here. Meteor dominates into 2026, as well as dominates the Launchpad C in 2026. That's, I think, the big question. Does Pump Fund or Meteor win? I think they can both win, but ultimately I do see Meteor edging them out. So good on Launchpads. Does Meteor continue to innovate in terms of the LP with their dynamic pools? We see Fair.Club Club using dynamic pools. I think the answer is yes. So both on liquidity on Solana and launches on Solana, Meteor is positioned very well to dominate. This is sitting in $100 million market cap. They earned that much last year. And so I've been betting on a big way on Meteora, and I think I've done very thorough due diligence. I think I've done very thorough due diligence on factoring their growth for next year, factoring their competition. And I see Meteor at 100 million as a very good liquid play, not financial advice. But I felt like I wanted to share some of the stuff I found over the weekend and my deep dive with you guys. So here we can even see, here's the Launchpad section. But maybe before I get into this, you guys can talk a bit about your thoughts on
Link
that.
this, please.
Yeah, I got you.
Yeah, no, I'm picking up what you're putting down here. I think we've both been pretty vocal on Meteora. Yes, the chart is what it is, but from a fundamental standpoint, we kind of know where Meteora is heading, what direction they're going in. We know the sort of monopoly that they have on the launchpad side of the business. We know that they have a really excellent community, and unfortunately, market conditions are what they are. Airdrop farmers will do what they do, but we've literally seen that with most airdrops. Like, if it comes around a time where the market is in a downtrend, then that's going to show itself on the chart as people cash in. But I don't think short-term cashing in on airdrops or short-term kind of emotional decisions around price, I don't think that reflects anything about the overall long-term business metrics. And I think right now Meteora is very, very well positioned to make a big big moves in 26.
Yeah,
From a business and a price standpoint, in my opinion. And that's not financial advice. That's just me as a trader, sharing my opinion.
absolutely. Yeah. So bullish Meteor for all these reasons, and we'll see what happens. Of course, the caveat is I look at the chart, and maybe one of you guys could pull that up on Moby real quick because I don't actually have any charts open.
Yeah, I got the chart open.
But the caveat here is when you look at this chart and you're like, wow, this is down only. Again, this is not necessarily an indication of business. It's an indication of a bad market and people cashing out on the free money they got from an airdrop. If you look at the Jupiter, look at the Arbitrum, look at the life cycle of airdrop tokens, none have airdrop nearly 50% to community. This is the life cycle. You get to sell off. Even in good markets, you get to sell off. Parlay that with a very bad market. I think we have an overselling going on with Meteora. And I don't want to make this just like an extreme Meteora bull case by me, right? I'm trying to be biased on both sides, but I think it's very clear that there's an overselling happening because of emotional traders getting free money and cashing it out in a poor market. And it's given us an opportunity, in my opinion.
But Dom, isn't this the story of Solana tokens though, right? Like when they come out, they get jeeted. Solana Jeets do their thing, and then smart traders come in. They look at the metrics. They do their due diligence. They have their own. They form their own thesis, and then you realize that half the time a lot of these things that get jeeted, like they end up just coming right back, right? And we've seen that time and time again on Solana. I have no doubt we're going to see that with Meteora here, and again, based on everything that we just shared around the business.
Yeah. In other notes too, it's not just launch pads. This is the thing. Everything we do, we're a show in crypto. Everyone we have on, everything we're seeing the direction go towards, it's pointing like to Meteora. It's got you. So lots of you think of Tessera, Purina, Oro, protocols, DeFi protocols that are used for trading, X stocks, right? DeFi protocols used for trading equities on chain or yield bearing assets or whatever it is, they're all using Meteora as well. So again, like Meteora's positioned itself so well to where we see a lot of on-chain stuff. We see a lot of launchpad stuff. We understand how liquidity provision works, but also on the other side, there's like TradFi coming to crypto, and that's all being powered by Meteora. A lot of people don't notice that. But your X stocks, if you're trading X stocks, that's Meteora technology. If you're going and earning yield through Purina, that's Meteora technology. If you're going through, private equity companies with Tessera, that's Meteora. And so like, there's still so much that we even don't see as a show, but like based on all the research I've done, based on all the guests we've had on, based on the direction we see everything trending, like Meteora is the backbone. And a lot of people don't see that. And so it's so obvious to me, so clear to me. And I just wanted to go and do a full long form breakdown of Meteora for you guys here because I just see it so clearly. Maybe I get wrecked, but I think the R is really good. Under 100 mil, even with a bad year, they did about 3 million this month in bad environments, right? So assuming worst case, they do markets stay terrible for longer, right? 36 mil they make this year, 3 times 12. Okay. 36 mil, 35, even 30 mil they make this year. Still, you got a token trading at 100 mil. That's a 4x price to earnings, like still undervalued in terms of traditional markets. So like, what's the downside? Like, What's the downside on something realistically like this? I guess could it go to 30 mil? Could it go to zero? Sure, but you know, I don't see that frankly happening.
I guess like this is what you kind of have to put your emotions to the side and look at it from this perspective. Ask yourself, like, how much more can this actually go down? And even if it does, even if Meteor, let's say Meteor, like, you know, I think the low here is at 20 cents. What if it goes to 15? What if it goes to 10? Does it make the setup better or worse if
Better,
nothing
dude.
changes with the fundamentals, right? So in other words, if the lower the price is, the better the RR is from a fundamental standpoint, then these levels here, you know, you guys have heard me say this multiple times with deep value. I like to call these sort of setups deep value territory. Like we are sitting, you know, our market cap, we've made more or Meteora has made more in terms of revenue than its market cap.
Oh, I also should probably add, like, they've bought back 3.5% and put like $20 million back into the chart. I should also add that, like, not only this. Oh, dude, how could I forget? The crux of my analysis too led back to, guys, Meteor is innovating on the token ownership side with MetaDAO, with Soar, with Street, with whoever. Do we think, and you've made this point too, Chill, do we think Meteor is not going to adopt some sort of ownership to token holder standards? Even forget everything I just said, or forget that, like there's a lot of value there. And forgetting all that too, they've already done buybacks. They've already bought back 3%. So maybe we get an ownership style token for Meteora paired with buybacks, paired with extreme business metrics. Like, I'm glad you said that, because I totally forgot they've been buying back like a significant amount of tokens already.
Yeah, the setup on Meteor, to be honest, is like not something to be ignored, because I don't know if you guys have seen this on the timeline, but I've been seeing a lot, like, where everyone's just looking at this space overall and they're like, I'm not willing to buy anything right now, right? Like, especially, you know, Pump Fund, people were bullish on Pump Fund. Now they got the Rico case. You know, people were bullish on Doge, chart looks abysmal. People were bullish on XPL, chart looks
I got it for you, Chill. I got it for you. Whoa. Back.
I got you in a sec. No, I got you in a sec.
All right.
This is what I was talking about. 12.2 million buybacks, 3% till. It's since gone up from there. Okay, that's all I want to show you. Got it, Josh.
So I think this is a great point, Chill. And if you look up here, you can see kind of their cumulative volume, and the purple was meme coin trading. And you can see it's been a fairly significant portion. And you think, okay, if memes are going down, what is potentially going to drive volumes on things like Meteora? And if you come down here, you can actually see their, where was it? I had it, tokenized assets. So in October and November, tokenized assets were, you know, a couple 100,000, 400,000 in daily volume, with gold being 25,000. And the high watermark as of recent on December 19th, tokenized equities was at 4.6 million, and gold was at 2,400. That seems kind of low, but compared to, yeah. So anyways, gold was, either way, what we're seeing is these numbers are really starting to grow. Since November 6th, you can see clear growth in tokenized assets. So this might be where you start to see some of the growth in volumes here, is not from memes resurging, but from stuff like tokenized equities finding product market fit.
That's what I'm saying.
And this is a core piece of the thesis. Yeah. But here's the thing, right? Like, I kind of understand why people miss it, Dom. When you think about this, this year, you know, we've been talking about ICM, about ownership, about all these things. And I was actually on a Spaces, because Bitcoin Spaces, they're a macro Spaces. They're not like in the weeds like we are. They cover Bitcoin. They cover, like, you know, some overall narratives and stuff like that. But they don't get too deep on things. And so when I went on, and they were like, they know that I'm, you know, ICM bull and what have you. And that was the day that Avicii pulled back. And they're like, oh, you know, Avicii was Avicii was going up, but now it's down, and this and that. And they were talking about the course that ICM took this whole year. Ben, you know, unfortunately, Pasternak did not leave a good taste in people's mouths. So if Believe was kind of the face of ICM and they ended it that way, you know, not many people are willing to look at this sort of sector of the market and to acknowledge any kind of value coming from it, because you know what was supposed to be the future of finance in Believe, what turned out to be just another, you know, massive, you know, in a lot of people's words, exit scam. You know, when it comes to, you know, the way that he's treated projects, the way that, you know, he's just kind of farm fees and things, and the way he just pivoted and all that good stuff. So I say all of that to say the market isn't looking at ownership. The market isn't looking at ICM. If you are interested in this sector, like you are one of the very few people who actually understand the value prop. You understand the potential pivot that could take place, and you understand that you are right now a minority in the space, but we still have the majority of people to onboard into ownership tokens. Like, you know, I know MetaDAO's been pretty popular, but a lot of people still doubt it. You know, I think, you know, we're in our ICM bubble, and, you know, we talk to a lot of people that are bullish on this, on this narrative, but, you know, going on spaces like that kind of helps me to realize that, you know, at the end of the day, not many people see the opportunity the way we do. So, you know, we are on the right side. We just have to wait for the market to catch up. And when it does, you know, I think we'll reap the benefits.
And full transparency, Meteora is a supporter of MCG, so we're very bullish. But I think beyond that, we have our own personal theses, and we like it. So just for everyone, you know.
Yeah, you know, and I tried to factor in as much bear cases as possible, right? That's why I tried to give you guys, hey, forget the Trump situation. It's never going to happen again. We're not going to get something like that. You know, assume volumes are going to stay low. But even as much as I try to be bearish, like I'm struggling to find a lot of like a strong bear case outside of token not having value.
The only equivalent to a Trump type liquidity event for Meteora is something like a major IPO choosing to come on chain versus going on the NASDAQ. I think that would drive equivalent volumes to something like you know, a Trump, you know,
sure, but this is the bear case, right? We're thinking the bear case here, so we want to say assume it's never going to happen again. You know, be as
yeah. But like if SpaceX said, "Hey, we're going to do a tokenized version of our security," I guarantee you'd see similar volumes. Just so people would wonder, like, what an equivalent, I think, liquidity event would look like. But yeah,
for sure.
Yeah. But I think all really important conversations to have, like all you know, there's not a lot that people are willing to throw their money at right now in the market, which is why we see the charts that we're seeing. There's not even a lot of buyers for Bitcoin at this point. So I think, you know, if there is a time to start looking at these high R&R setups, would be a time like this when no one is willing to throw their money at anything. And, you know, things like Met stand out. There are a few others, other projects that stand out as well. But I definitely think Met is one of them. But I think also next year, there's just going to be a much, much bigger conversation that will, again, just shift the focus, reset how all of us view investing on chain. And that's going to be a very big moment for the entire space.
Yeah. Agreed. Well, I'm glad we got a little Met segment, because I think that's like one of the positions I'm looking to build the biggest position in, and like give me anything sub 100 mil. I'm probably pretty aggressively DCA.
Yep. I had a Metverse troll tweet retweeting Shadow, and he said, you know, troll undervalued here at 40 mil or something, what it was. And I was like, no, Met's undervalued at 100 mil, and Met's up now to 120 and troll's down. So
yeah, I mean, 120 is not the end goal. Like
no,
this is a liquid
billions.
10x I'm looking for what it's worth.
I think FDV on something like Meteor in the right market in a bullish altcoin season, Solana ICM taking hold is like in the, you know, single to double digit billions.
Yeah, I want to be very clear. And again, like this is something that substantially increases or decreases based on volume. If the trenches, again, it's like it's a barometer of on chain right now, or it's a barometer of crypto in general right now. If volume ticks up a ton, obviously the thesis we've laid out is going to play out, and like Meteora's value or assumed value increases many multiples, and same thing for if volume just stays low like this. But I think the truth is when volume ticks back up, you can start speculating much more. Okay,
Yeah,
they made 100
maybe
mil
another
last year.
dynamic that people have not thought about is centralized exchanges doing more and more on-chain volume in terms of order fulfillment. Like we've seen OKX have a wallet, and there's some routing that OKX does. But I wonder how much centralized exchanges will play to bring volume on-chain. I think Bybit made some announcements at Breakpoint. BitGet made some announcements at Breakpoint around exactly this.
I think Coinbase is making a push towards on-chain too, if I heard.
Yeah, all DEX tokens on Solana will be accessible through
That's
the
right.
DEX feature on Coinbase. I don't know if centralized exchanges will have a big impact this cycle, to be honest. I mean, even if they do bring some retail on board, I don't think it'll be as nearly as impactful as it was before in previous cycles, because again, we have things like Phantom, we have things like FOMO, we have a ton of different ways to onboard. We can use Apple Pay and things like that to get on chain now. We can use credit cards. Like we don't really, there's a lot of other avenues that retail can use.
So that's not what I'm necessarily talking about. I see what you're saying. I know on trading exchanges are kind of like not super interesting these days. But here, BitGet, this is what BitGet announced, is a UEX, or a new way for 100 million plus users to trade every Solana token instantly without a listing process. This is kind of the gatekeeping of liquidity. Historically, was people that are on these exchanges, but that volume, none of it is routed anywhere on chain. Whereas now you're seeing kind of more of these integrations where it's like, okay, the exchange is like a customer facing layer, but there is the ability to
on-chain activity.
They're basically disrupting themselves here because they're getting disrupted. They're realizing that every new launch and price discovery is happening on Meteora, it's happening on Pump, Raydium, etc. It's not happening on exchanges, right? So they're getting zero of that pie, and now they're like, well, we want a piece of that. So,
yeah,
that actually makes a lot of sense.
So yes, do I think exchanges are irrelevant? Yes, but the caveat here is that's bullish for on-chain. That's my point, is that some of those trades might get pushed down to the chain itself.
So I see what you're saying. You're basically, they're kind of realizing that their business model, being a centralized exchange, is either dying or doesn't have
it's toast.
The mark. Yeah, it's not what it used to be. And so they're all pivoting to on-chain, and that's going to be bullish. Yeah, that actually makes a lot of sense. Even in death, centralized exchanges are going to bump our bags. Shout out them.
Yeah. The one metric I haven't looked at for Meteora that I'd be curious to know about is wallet turnover. How many of airdrop wallets have sold or exited, and how many still hold?
Yeah, that would be
what's
a great
the change of
metric
hands
to
we've
have.
seen? Yeah. So, all right. I think that was like the Met bull case. Great conversation there. Any last closing remarks? Maybe I think we'll maybe clip that up and get that out.
Yeah, a ton of great clips today. I actually like that conversation after we had Radar on as well. That whole conversation around giving tokens intrinsic value and things of that nature. I think we had a great conversation. Yeah, tons of great stuff that we talked about here today, guys. Hope you guys really enjoyed today's stream. We had Radar on. We also had, oh man, it begins with an F, and I don't know why the name is Fair.Club. So really great projects that we had on today. I'm gonna pull up the schedule real quick for this week, or I should even say not even this week, just tomorrow. Quick breaking news here: we won't be streaming for the course of the rest of the week after Tuesday. So it'll just be today, tomorrow. We'll get some streams in, and then we'll go from there. And I'm sharing my screen as well.
And before we
ooh.
close off, I want to cover
Ooh.
one more thing.
Ooh.
If you guys remember, Avi Patel said there's a big AI lab that said they will start stroking us checks indefinitely if we can get to that 100 million assets. Well, believe it or not, guys, they've hit the 100 million assets as of a couple days ago. And so
100K downloads, 100K downloads. That's what
as well. Yeah.
And also 100 mil assets. Okay.
Yeah, no, this is great. Fuck all that. The important part is the assets.
Talk to them. Let them know.
They have people using the app. And as you can see, this is in tandem with, they're getting 100K, tons of downloads. They're getting record number of downloads every day, but also asset uploads. And they've hit that 100 million assets, which was the number that this big data lab wanted to say, hey, we'll start signing these checks if you can hit that number. They've hit it. So maybe we're expecting checks to be signed soon, which leads to maybe further raises. Now they've got proof of they have the supply side or the demand side kind of getting taken care of. So interesting information there from Avi Patel.
We have to shout out one other chart. Can we pull up Cled real quick and then go to Pay AI? This one, Pay AI has been on an absolute tear over the weekend. And you saw it on MCG, obviously. But really quick, Cled here, ladies and gentlemen.
Chart looks great.
Yeah, that looks ready to
consolidated. Pop. Yeah. That looks
what's volume? 33K volume on Cled. Yeah, there are no sellers. There's no one selling. No sellers are left. 33K volume in 24 hours. Okay, Pay AI.
Pay AI, guys. This, man, every time Pay AI is on MCG, something gets picked up here. Look at this. This went from 5 mil. We had them on the 17th, 18th, right there. Dude, what's that percent move, Dom?
Oh, man. They came on. He dropped some nasty statistics about growth. They pumped 200%. This is the thing, though. It's not 180K market cap token, 200K market cap token. This is 5 mil to nearly 20 mil. That's a significant.
There was two key updates that he gave. One was he broke down the numbers, and then I did a tweet that went viral, which has gotten I think 40,000 views, got retweeted or interacted by Third Web, which was crazy. And then the second one was that Coinbase's, I forget what they call them, Coinbase's thing had turned on fees, which meant all the others could turn on fees as well. And now the what do they call them?
Did we make a clip about that?
Yeah, we did.
Nice.
Of the fee sharing thing on?
Because he specifically mentioned that in our stream. He said Coinbase originally didn't think they were going to be able to monetize this. Now they're monetizing it. And that's huge for us.
Yeah. Which changed kind of, I think, some of the investment thesis that people were looking at. So those were the two big things that if you're on MCG for that interview with Notorious, you would have found out. And again, you would have had this at 5 mil instead of 18 mil. But wild.
Bloody markets, bullish markets, MCG still cooking. Hope you guys are enjoying it.
Yeah.
Motion is real.
No position on my end, unfortunately. I wish I did, but
shout out Sketch for this quote. When did we know MCG had motion? Since birth.
Creative.
Oh my gosh. All right, so rest of the schedule for the week. So we had on Fair.Club Radar today. Great conversations. Hope you guys enjoyed that one. Tomorrow we have Mixor.fun coming on, and then we also that will be the new launch on Soar. So we got the whole team joining us. And as you can see, Wednesday, Thursday, Friday, it's holidays, it's, end of the year. So spend time with friends and family, touch some grass or snow, depending on where you are. And see outside, make memories. You definitely can't buy back any time. And I've been reminded of that here recently. So you can't buy time. So spend as much time with your loved ones as you can. Hold them close. Let them know you love them. But great week here so far. Great stream coming up tomorrow. We will see you guys there. And boy, do we have something coming in 2026. It's about to be a big year. So appreciate you guys for joining us today. And we'll see you guys tomorrow. Deuces.
Peace.